Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody, welcome back. Good morning. It is decision time. What I mean by that is the S&P 500 is sitting at the level. It's sitting at what I would call a pretty decisive or important moment for this market. And with unemployment claims coming out in 10 minutes, could that cause a stir? We'll just have to see. Good to see everybody in the chat. Thank you for being here. Shout out to our regulars and welcome to the new people. 140 people joined so far here. We just got started. So do me a big favor. Hit the thumbs up button, do the YouTube stuff, subscribe if you're new, all that good stuff. Let's jump right into some charts. This morning, this is an interesting thing. We've got the S&P 500 bounced back the last few days. And, now I start to get a little bit like, okay, we flushed out a lot of the kind of bear euphoria, if you will. What I mean by that is the people who were bearish or may still be bearish on this market, they got really loud and they got kind of beaten up here just a little bit with this spike back. The reason I say now is time to really prove the case here is that if bears are going to take this thing lower, now they've gotten an opportunity to reload a little bit, right? 2 key levels I see for the bears out there. If you're bearish on the indices, right? You've had a little red to start the day. Do the sellers take control of this 57.20 level? Now I'm going to say this, I am bullish, so I'm not on your side. But if the sellers were going to take this, right? And I think that it's worth pointing out, even though I am bullish, this is the spot. If the sellers were going to take it, we would see something like this, right? I would say either here or here, you would get kind of the return of the bear, if you will. If there's going to be any follow through to this move, we are at a decision point. Now, if you're a bull, here's where the decision point can also favor the bulls. If that fails, I would give a strong probability that we continue to go back higher, right? So today is pretty decisive. And if you get a candle that is strongly one way, like let's really zoom in here on the daily for a second, and let's give two scenarios. What if unemployment claims come in solid, and or we get some sort of conflict resolution between the US and Canada, or something on the tariff front that is positive? Well, price action would be really key here. If we get a candle closure that looks like this today, that, my friends, would be super bullish, in my opinion. You're talking about like the Super Bowl, like we're going Super Bowl, okay? Because at that point, now you've broken through this stronghold for the bears, and we've broken this bear pattern, right? To be fair, however, like I say, this is a decision point, because the sellers, if they take this thing, and let's say you get a candle that looks not like this at all, and instead we do some follow through activity to what we're doing right now, you get a candle that looks like this today. Welcome back to the bears, right? So that's why I'm saying today's a decision point, because depending on how now, if you get a candle that closes in the middle, then we just reset and do it tomorrow, right? But if you get a decisive candle today, and I've been talking a little bit about this recently, a decisive candle, by my own definition, is one that is above the average true ranges that we've recently been seeing. So I've been using this average true range filter to help us better kind of understand if the candle that we are looking at is truly kind of a quote unquote decisive candle. So what I mean by that is, take a look at your average true range. We're moving about 100 points, right, per day. So if we're looking at this and we're saying, okay, 100 would be a move of this far. Let's mark this far, or let's just get rough guess this far. If you get a candle that closes above or below those two levels, then I feel like you have a very decisive price action move. Now, why am I saying decisive? Well, because that would tell you that the move is above average daily range. Okay, and that's really important there. So we're looking for a candle closure. We're looking for a closure. Let's call it 5760 or 5590. Okay, 5590 or 5760. If you get a decisive candle, if you get a decisive candle closing outside of that range, then I think in the short term, that would be bulls taking over or bears taking over. Now, in terms of stocks, the other reason I say this is so decisive is, here's my positioning, okay? I have a good size exposure to gold right now. That's about half my account. I use a portfolio of a stock brokerage, so about half of my margin is currently in gold longs, okay? About 10% of my margin is in long bonds, TLT, and about 40% of my margin is long like tech stocks. So, and those are not short-term trades. Those are long-term holds. This is completely straight up my game plan. If you get a decisive couple days from here to the upside, what's going to happen? I'll tell you what's going to happen. I'm going to probably look to get long, because S&P 500 is sitting at neutral +4. The only thing holding me back from going long on a trading basis, not a long-term basis, right? I do a little bit of both. If you watch my channel, you know I'm kind of a position trader, and I also am a short-term swing trader. I do both. I have two kind of approaches to the market. One is more long-term, or not. It's not like extremely long-term. It's not investing. It's just position trading. I'd call it like active investing to a degree. I do that on Forex, and I do that on individual stocks that I like. So I have a basket of stocks that I've already been buying, right? So I have a good bit of that. If the market goes lower, I'm probably going to sell some of my bond positioning, dig deeper into that, and buy more stocks. If the market starts to rip higher, and those are, again, position trades, they're not short term, I'm looking for a reversal next week kind of thing. Or if we get a bump to the upside, the trend filter on the EdgeFinder is going to trigger bullish, and this thing is going to be straight up +7. and then I'm going to probably get long. We have Bitcoin printing a bullish reading. I'm very skeptical because it's just a +5. Now, if you're an EdgeFinder user, let me tell you something just because I've been, by the way, we're about to hit 3 years since the EdgeFinder first launched, and I'm really excited about that. Just because, again, it's a big milestone. I was talking to the developer this morning just about how, not to go on too big of a tangent, but I know this is touchy-feely, but him and I were just talking about, we were looking over like the reviews of the EdgeFinder and all the different, emails and things that we get from customers who use it. And I know this sounds like a sales pitch, but I promise I'm not trying to be. And the feedback, the people who use it, the community around the EdgeFinder genuinely is so motivating to everyone on our team. It's the coolest thing in the world. So many people use it. So many people give us feedback. So many people are passionate about the direction of where we go next with our development of the tool. I'm telling you, that is one of the coolest things in my life. And I'm grateful every day to be able to do that. Anyways, touchy-feely aside, I genuinely mean that. And thank you to everybody who supports our work and also who just watches this stream, watches the videos. I really appreciate it. Bitcoin at a +5, though, from my experience of using this thing for the last 3 years, is a +5. You got to squint your eyes just a little bit, because a +5 can fall right out of bullishness again, right? You start getting into +7s, +6s. The reason I say this is that a +5, right? A neutral score is 4. So if a neutral score is 4 and a bullish is 5, it's not that I don't like +5 readings. I'll still take a trade if I can find one, but I like them a whole lot better once you get into 6 and 7 territory, because then it's more likely that we can drop a point or gain a point and still be in bullish territory. Does that make sense? For EdgeFinder users, I don't know if you feel the same way, but that is something for me personally. I'm more confident in an idea if I have a little bit more wiggle room, quote unquote, with the score. If the score is at +5, one thing changing here negatively takes it out of bullish camp, and I feel a little annoyed, right? But if I'm at +6, if I'm at +7, if I'm at +8, or on the other side, right, if I'm at -6, -7, -8, like these readings, I like a little bit more. -5s, they're still solid readings. That means most things are bearish, but I like that confluence, right? By the way, real quick plug, if you guys want access to the EdgeFinder for free, there is a random winner being selected tomorrow. So you have one remaining day to join the EdgeFinder giveaway. All you have to do in order to join it, completely free to join, just join our Telegram channel. We'll be dropping EdgeFinder giveaway information in there very soon. If you haven't already, completely free to join. Just take a second, come join the Telegram channel. There's also bonus content being shared there. Like I did a chart of the day breakdown on gold yesterday. So here's pound US dollar written up by Frank from our team. So we do a bunch of bonus material in our Telegram channel. And the reason we're doing our EdgeFinder giveaway in there is because there's plenty more value in there that I want you guys to make sure that you're getting access to. So there you go. Okay, so back to the chart where I was going with this. The point that I'm trying to make with EdgeFinder there, and we've got news here in about 30 seconds, so let me just switch over. Point that I'm trying to make is when you get a score that's getting pretty close to a bullish reading, I start watching it a lot closer, like, oh, okay, we might be able to get the setup. So if S&P can break out again today, we're probably going to see some bullish flips on the EdgeFinder. So we'll see. But I'm not in any short-term trades. I only have some long-term positioning, and we've got our breaking news coming in here, guys. All right, let's see if unemployment claims give us any kind of movement this morning. Remember that news is only as market moving as it is surprising. So let's go take a look at the numbers. Based on the initial reaction, likely they are not a big mover. Unless they haven't come out yet. Hold on. Okay, yeah, not a big mover. And there you go. Right? So we didn't even have to look at the data. We already knew the data came in pretty much exactly in line with expectations. That's why the market's not moving that much, right? But, I would say this is actually, I would actually say that this scenario, right? Claims coming in line with expectation is good, right? They revised the previous from 220 to 221. So there's just no change, right? So the reason I say this is good is let's think about this. Do you know what recession looks like in the United States in terms of these numbers? You want to know what that looks like? So everybody who is so adamant that we are going into a terrible recession, again, I cannot help but make the point that I think a lot of it is a politically charged thing. And I'm not saying you have to like Trump or not. There's valid reasons. The dude is, just from a personal standpoint, sometimes hard to listen to. He's a pretty abrasive dude. Put that to the side, right? For a second, and let's think about this. 300,000 unemployment claims is typically what you see in a recession. We're not seeing mass unemployment claims. So don't let your bias about, oh, I don't like what Trump's doing here, put that to the side. Look at the data. Is this signaling recession? No. The weekly jobless claims are powerful because what they do is they give us an insight into the labor market, and it's a pulse check. They're important, and they're not signaling recession, okay? So at 223K, coming in line with expectations, things aren't breaking down like the media will tell you, right? So again, I've been adamant about that point. I started this year transparently discussing with my audience that's going to be a challenge for me as a content creator because all the Trump stuff, all the political charge stuff, it can muddy the water, if you will, for a lot of traders. A lot of traders have abandoned their principles in trading because they like or dislike what's happening in the White House. And you can't do that. You cannot trade that way, right? Because if you're changing everything because Trump's in the office, and this goes on both sides. Some people are like so gung-ho that the stock market is going to go straight up and to the right forever now that Trump's in the office and that the economy is going to be perfect. And equally as dumb is just thinking that because he's in office, the whole thing's going to crash, right? There's so many people making that mistake. And I've been preaching over and over, you can't do that, right? You can't do it. You can't let your political bias completely dominate the way you focus on markets. It's really a critical mistake, and people make it all the time. It's one of the most common trading mistakes is trading your politics. Don't do it. Just trade the data. Trade the price action, trade the data. Okay? Anyways, most reaction pretty muted here. I would say that muted is okay for in terms of stock market stuff, right? Had we seen a big spike up in unemployment claims, yeah, stock market would be lower. But with no surprises, market's just like, okay, we're fine. It's not a huge deal either ways. So we didn't get a big surprise on unemployment claims. Overall, gold's still getting a very bullish reading. I'm still long gold. Let me check in on gold. And then I want to look at what happened with the Bank of England this morning. Gold here on the daily chart. I thought about trailing my stop higher, but I didn't quite like. Basically, if we put in a higher high from here, if we take out this high, I'm gonna trail that stop right up to here. I've been trailing loosely. We have a very strong reading on the EdgeFinder. And so I'm trailing my stop loosely on this one. It does play in a role of what I do with my stop losses. When we have a stronger score, I'm willing to be a little bit more loose on it, right? Trailing the stop a little bit more loose. But I wanted to see this thing kind of follow through a little bit more, right? Break that level a little bit more decisive. But what we can admit here, or what we can acknowledge from the bulls, is so far, this wick off the low is a fantastic signal, right? That's some strength right there. You've got consolidation, pulling back and holding. What I would love to see would be to see a follow-through move to the upside for gold, taking out the highs. And I know there's a lot of people who are like, please no. I thought about something before I was going to bed last night. I know what it feels like for traders who are watching right now, who are short gold, and they're levered up massively. I know what it feels like because I've made this mistake in the past myself of being like, the anxiety of that actually happening, stressing you out to no end. And I can tell you from doing this for the years that I have, that that anxiety is telling you something about your trade size. It's way too big. I know many people who are listening right now. Picture that I'm in the room with you. I'm talking directly to you. If you are guilty of this, you're not alone and you're not crazy. That's just human experience. But I can tell you right now, if me saying, look, I'm bullish on gold, let's just say you're short. You're short around, let's say you're short around here. You're underwater in the trade, right? And you're like, oh my gosh, I'm stressed out of my mind. This is anxiety inducing. I don't know what to do. I'm stuck in a short position and it just keeps going higher. And then Trader Nick comes on his YouTube channel and he's bullish and he's saying, what if it goes up here? Right? Now, I am not trying to trigger your anxiety worse, right? Because I know how that feels. I know how it feels. But first of all, your reaction psychologically to me saying that shouldn't do that to you. And if it does, your trade size is too big. And that's okay, right? You're a human being. If you're feeling like, oh my gosh, if gold rips up there, that's going to absolutely like blow my account. It's going to be awful. Then your size is too big. And guess what? Guess what? You do this long enough, it's certainly going to happen like that sometime in the future. And if you don't change what you're doing, you are guaranteed to blow your account, right? So I'm sharing this through learned, paid for, painful wisdom. Okay. If I'm talking about, oh, gold might rocket. I don't know if you've not been around the block for a while, gold could make a sprint for 31.20 in 5 days. Okay. I'm not saying that's what I think is going to happen, but understand that if you trade long enough and you are hoping, you're like, please, Lord, take gold down because it's going to kill me if it does that. I'm telling you, you may get away safe this time. But if you keep trading like that, if you're praying for reversals, if you're hoping to God and you're anxious out of your mind and you can't sleep, your position size is too big. That's the problem. You can't trade like a logical human being when you are literally staring at your screen, hoping and praying that the chart moves in your direction. It's not sustainable. How are you going to do this for the next 10, 20 years, right? How are you going to do this for the next 10 to 20 years if you are constantly hoping and praying for survival? That's not a way to trade. So then what's the answer, Nick? Well, first of all, if you're trading on Forex brokers and your account is too small for gold, you can't be trading gold, right? If you trade on, I know a lot of traders who are watching this are outside of the US, you trade on a CFD brokerage, so you're trading XAU USD, right? You might not have a big enough account size to stomach the moves on gold, okay? That's the first thing. You need to have capital in order to stomach moves in gold if you're going to trade it. That's just a requirement. You cannot trade gold on a small account. Like you can say you can, but your risk is just way too high to sustain it for the long term. Okay. You do your thing. I've done this for a long time. Doesn't mean I know everything, but I have seen more traders blow their account trading on gold because they're trading with less than $1,000 than anything else. That is the account blower. Gold is the account blower. But for those who have patience and discipline and account capital, gold is a wonderful thing. But again, this is a great question. Well, a small account is relative, right? Just depends. But if you're trading on a CFD brokerage and the minimum lot size on gold is 0.01, easily $1,000 is almost too small. 5,000 is more appropriate because again, your 0.01 lot size is still going to move your account massively on a percentage basis. If you can't easily risk, 1% on the account with a distance of like this far, right? That's 2,500 pips. Because remember, gold moves a massive amount of pips. A 1,500 pip, 2,000 pip, 3,000 pip. Like if those distances are going to blow your account, gold's way too big. Like it's way too big for your account. Okay. I really think Young's Billionaire 10K. I think like honestly, yeah. If you're trading on a CFD brokerage, I don't trade on a CFD brokerage. I can't trade CFDs as a US trader. I trade on a stock exchange and I trade GLD. And what I love about this, if you're a US trader, maybe Chandler, you could drop the link to Webull for us. Look, if you are in the US, I love the fact that we can trade on stock brokerages and we can trade ETFs. Now, the reason I say that is because an ETF cost me $280 per share. So for just $280, I can buy a share of GLD, which tracks gold prices. It moves with gold. And the beauty of that is that for small account sizes, you only need $280. It's kind of awesome, right? Here's Webull, by the way, if you'd like to check it out. For US traders, you get free shares when you sign up with Webull using my link. I think it's up to 8 free shares or 12 free shares. When you click that link, you'll see the offer they have for you. But if you're outside of the US and you want to trade gold, I honestly think that if you're on a CFD brokerage, you need 10K or more. I know it's not popular. I know that people are like, well, screw you, I'm watching somebody else. And I get it. I understand. It's not a popular opinion, but I think that you're more likely to blow your account. So I'm going to tell you the truth. That's what I do on my channel. I try and keep it as real as possible. I think that if you're trading with under $10,000 on gold with a 0.01 lot size on a CFD brokerage, you are likely to blow your account because your risk management is really hard to do with the size, the contract size that brokers offer you. Again, doesn't mean the broker's just offering a product, but a lot of people are abusing it with the high leverage that's offered. So yeah, like I said, I want to get back to this point because it's really, really important. If me saying, I'm not sure I understand. Sorry, my watch just went off. If me saying like, hey, gold might rush up to 3,100 stresses you out and gives you a ton of anxiety, then you have to think about what that means, like what's going on. Like, look, I am long gold, and if it craters down and I give back a whole bunch of gains, whatever, right? It's not going to make or break my entire financial situation, right? It is what it is. But you have to have that relaxed nonchalantness in your trading. I'm telling you that right there, what I just said, I'm telling you, man, that's a secret in trading that everybody wants to grow their account so quickly, so they stress themselves out to no end. Trading needs to be low stress. And can I just give you a little bit of personal experience? I do this stuff for a living, right? I trade for a living, but I also do YouTube. And so here's something that a great advantage and disadvantage of my personal role. I have to stare at the charts every single day, all the time, whether I want to or whether I don't want to, because it's my job to be a content creator. I run a software business, I create content, and I trade. I have to look at this stuff all the time. A couple of years back, I went through a really bad drawdown in 2022 publicly and discussed it, and it was no fun. And when that happened to me, I made a decision that I think all traders should make, regardless of if they make content or not. I decided that I needed to drastically reduce my position sizing and abandon, like I don't care if I make less gains. I have to be in front of the camera and I have to show up to work every day and talk about trading. If it's psychologically wrecking me to do that, I can't function. So I have to reduce my position sizes. Well, little did I know that little trick that I had to do in order for my own personal role, because I have to look at this stuff. Most traders don't have to look at it. They can go take a walk, they can do other things, and they don't have to look at it every day. If you too make that same pledge to yourself, I can't put myself in anxiety comas all the time for my trading. If you make that change, oh my gosh. How do you make that change? Position sizing down. That's it. That I'm telling you, there a long time ago, I listened to Rob Booker and he said the fastest way, and I'll never forget this because it changed my trading and just my life in general. The fastest way to be a better trader is to reduce your position size. Write that down, tattoo it on your forehead. I'm telling you, I've got nothing more valuable to say to you than that. Reduce your position sizes and watch what happens. You start trading logically. you start getting bored with trading. If trading is exciting to you or anxiety inducing, you're up one day, you're depressed the next day. It's not it. That's not how you trade long term. That's how you blow up and quit and call trading a scam. I'm telling you. Anyways, I know that was a lot of a rant. I know we have a lot of charts to look at. Yesterday we were on stream for so many hours and it was a great time. I hope you guys stuck around if you were here yesterday. I mentioned this earlier, but just a quick reminder, join the Telegram channel. We're doing a free giveaway on the EdgeFinder, and we have some really cool more giveaways, some bonus giveaways coming up. So if you want a chance to win something, join the Telegram. It's completely free to join. We post bonus clips and content from the streams here and the videos. I said this earlier, but our chart of the day yesterday was gold. The chart of the day concept, people seem to like that. Also, just a pro tip as a viewer, if you like something, I know you always hear like YouTubers and people say like, hey, like the video. But if you like a video, like this stream right now, if you like the content, what that does is it tells YouTube to give you more of that content, or it also tells the creator, do more of that content. So just a little pro tip, if you're ever watching somebody and you're like, this is good, do more of this, the thumbs up button is not for them, it's for you. The thumbs up button for serious viewers is for you, not for the content creator. I look at the like button on my streams and videos all the time because the more, if there's a strong like ratio or a lot of people liking it, I'm like, okay, I'm doing more of that because that's what people want. Anyways, the other thing I wanted to mention, we've got in just a second, Miko and I think Marco. We have not seen Marco join the call just yet, but we're about to jump over there. Let me just really quick recap the bank rate votes here. XXX format, the first number is how many MPC members voted to increase interest rates. Second is how many voted to decrease rates. And the third is how many to hold rates. So today's number, 0 committee members wanted to raise rates, 1 wanted to cut rates, and 8 wanted to hold them. The interesting thing is that the forecast was for 2 of them to want to cut rates and 7 to hold. So we had a slightly, quote unquote, hawkish bank rate votes. Did we see any action in the pound off of that? Little bit of a bump in reaction to that for the pound, but still getting kind of hit with the dollar strength that's coming in here today. Okay, guys, up next, we've got Miko and I think Marco joining us, but for now, we've just got Miko. So we're going to go ahead and start that segment of the stream. Be right back. We're going to play a quick clip thanking our sponsors of this show. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, it's just Miko today. Miko, you're here. How you doing, man?
I'm doing good. How are you, Nick?
I'm good. Good to have you back on the show. We do a segment like this every week, going through kind of a rapid fire charts breakdown. And I'm glad you're here, Miko, because I was going off on too many tangents and rants. So now we're going to focus up, play some charts through the screen here. And where do you want to start? What are you watching right now?
Well, I just hopped into a position on Euro Yen.
Okay.
Currently selling that. Actually, it was actually last night. I've been keeping a close eye on the yen pairs because I'm looking for a lot of downside on the yen pairs, and I've been kind of judging which yen pair I should trade. Euro Yen's had a pretty big pullback as of late because Euro is very, very strong. So it actually gave a pretty decent pullback. And it came back into a nice air of confidence for myself. Nice trend line, resistance level there as well. I'm looking to see if I can potentially capitalize on another lower high. We've had one over here, second over there, and hopefully a third. I jumped in on the 4-hour time frame on this candle here, which actually was the same candle closure or same time as the daily candle there. So kind of a 2-in-1 there, but I'm looking to see if I can swing it back into the low. I've been pretty bearish in the yen pairs. We've had some nice pullbacks. Euro yen was the best for me, so I'm currently sitting in that position. I'm looking for a pretty big swing. Hopefully we can get to 155 and maybe further as well.
Yeah, the euro yen definitely seeing a little bit of downside, and especially some of the other yen crosses as well. You have pound yen holding up a little bit better. Pound's been kind of strong here recently. You also have Aussie yen, however, though, and Kiwi yen. I have a position on Swiss yen to the short side. Specifically built around a concept that we talk about pretty frequently when we talk about yen pairs, which is the carry costs to these positions. Because my approach when I trade FX is a little bit more dollar cost averaging approach, and I can end up holding on to positions for a while. I chose Swiss yen simply because it is of the major kind of currencies, a cross that kind of gives you a more cost efficient way. And for those who may not be familiar, swap is basically your overnight cost to holding a position. And it depends on the two interest rates offered by the two central banks' currencies or for their currencies. So the reason I chose Swiss yen is because they offer similar currencies. The divergence between them does not generate a huge cost to holding the trade overnight. But euro yen, the difference here, Miko, is you're more you're taking a very specific trade. Do you have a stop loss? Actually, let's pull up your trade one more time on your screen. So you have a stop loss above the highs, though.
Yeah, so
Okay,
164, 700-ish around
gotcha.
above the high.
Gotcha. Well, the trade's off to a great start, and I think that yen strength could be coming back into the picture. Bonds this morning were up. Yen's up here this morning. That's just kind of showing a little bit of risk-off sentiment, and falling interest rates in the United States kind of supports the Japanese yen. So there's a fundamental story I think that could be playing out here as well. What about the dollar, Mika? The dollar trying to find support here around 103.5. Are you a buyer or a seller if it rips?
Yeah, I'm a seller if it does push up, but yeah,
Okay.
dollar has had a really big sell and looks like it's finally finding support. I like how it's kind of rounding off a little bit. So 103.5 looks to be some solid support, but my expectation is that I'm expecting a lot more downside in the long term. I do think there's a good chance we could be coming back to 100 potentially. So from a swing kind of outlook, if we can pull back, that'll give me the opportunity to find some lower highs to get involved in. Not too sure if I will be able to swing it all the way down there, but that's kind of the direction I'll be looking to trade in. So again, a lot of like Euro USD's had a big push, so I'm expecting it to kind of retrace. Not really the trade I'm after myself, but it does look like we're seeing some nice downside there for Euro. Of course, pound looking a little bit less bearish, but it does look like that's kind of getting ready to turn as well. I am trading dollar CAD, but I potentially might close the trade a little bit early because it looks like resistance is no longer holding. I was shorting this one quite a while back, entered on the 4th of March. It's been very, very sideways, unfortunately, but we didn't break through that support, and now looks like price is respecting it. Now looks like we're about to break resistance there. I'm still pretty bearish in dollar CAD, but it might mean we push back to where we came from. So I'll potentially look for some re-entries to get back in for the sell, but I'm only really looking to sell dollar at this moment in time. Dollar CAD looks okay. If Euro USD can retrace, I'll like that one as well. And if pound USD can retrace, I like that one as well. But yeah, those are the only USD pairs I'm looking to trade at the moment.
I have a fun chart to show you that I'm drawing up here, Miko. Let me see if I can switch my screen over. Check this out. So I drew a head and shoulders, right? I'm drawing all sorts of pretty pictures this morning. So I've got a head and shoulders, left shoulder, head, right shoulder. Everybody gets it. The neckline here, right, breaks, and we had the big drop. The reason I wanted to show you this is that sometimes this kind of from the neckline to the head distance, I've seen a lot of technical traders like to take this and kind of measure out where this could go. So if we say at the break of the neckline, if we got an equal distance kind of from that head and shoulders peak to trough, what I thought was really interesting is it takes you right down to this key level, which I think is possibly our next step, the 102 level, if sellers take control. I just thought that was an interesting, symmetry. And the thing about technicals that I think is so powerful is that so often you get these symmetrical type moves. It's almost like the beauty of technical analysis is that it's sort of a self-fulfilling thing, right? It's almost like
Mm,
everybody looks at the stuff, they stare at charts, and they kind of find similar levels and confluence things happen, and everybody kind of trades the same way. So I think that actually is very possible. That would basically be telling you that, okay, we've done this kind of move. If we do get some kind of pullback, maybe we get a pullback into this, but maybe the final kind of resting point for the dollar, maybe it's ultimately headed towards that 102 level. We'll see. But I do think I'm kind of the same camp as you. If you get a rally in the dollar, I think that may be an opportunity for sellers to uh, take back control and move this thing a little bit lower.
yep, yep. I also do look
Yeah.
at that with the consolidation as well. Like when
Mhm.
you've got like
Oh yeah.
price, trying to think of a good example. This is the okay example in Euro USD, but when we have like a range and then most of the time when we break out of the range, if you kind of clone that kind of range and bring it above, that's kind of a good way
Yeah.
to kind of gauge how far price can move to. I use that as kind of a rough gauge to help with targets, but it's always a nice kind of thing to think about. Okay, if we break out, where could we get to next?
Yeah.
Potentially the height of the range is a good thing to look at as well.
One of the craziest symmetry things that I ever saw. Let me see if I can pull this up. This let's look at a weekly chart on the S&P 500. See if I can find this. Um, Here is the COVID lows to here, and if we just repeat that,
Wow, that's
isn't that
almost
so
bang on the money
interesting?
there.
Yeah,
Wow.
so it's like, the Bears love this one because the Bears are like, "Aha, it's going way
Yeah.
lower." But, I just thought that was an interesting kind of measured move. So you take that
Mm,
massive rip post-COVID, and you just, like you did, copy and paste it, and
hmm
it interestingly lines up just about perfectly to the move that we had following the inflation scare in 2022. So just thought that
Yeah.
was interesting. I mean, measured moves, that's the, kind of a very fun, interesting side of technical analysis. But yeah, interestingly, dollar index still on a daily chart, huge slide, trying to gain some footing. Well, let's say this, Miko. Let's say that you do get the dollar bounce.
hmm
What are you looking to trade off that? Because you've got euro yen on the short side. Are you interested in pound dollar? What are you watching on the currency pair side
Well, I
for
actually like,
dollar?
yeah, I actually like Euro USD the long side, which is funny
Okay.
because I'm shorting Euro Yen.
Yeah.
But if the trade is right, I'll look to take it. Because the way I see it, Euro USD, I've been looking at a lot of the higher time frames recently to see kind of where we've been positioned, and a lot of the USD pairs I've noticed have come into some really big levels, especially Euro. This is some massive support from 2016, I think. Yeah, 2016, which looks like we're rejecting on the monthly candle. I know we still got 11 days before the candle does close, but
Mhm.
if this can hold, this does invite a lot more upside. So looking at Euro pullbacks to me look really good. So dropping to the daily chart, I'm looking at some levels I could consider. I like the low here at 1.078 roughly, and I like this level here as well. So I'm watching Euro currently fall, and those are the two levels I'm looking to see if I can bounce from. And also pound USD looks pretty good as well.
Yep.
Of course, they're very similar pairs, so I'm expecting the same thing. I'll just see whichever one sets up better for me. I like this level at 1.27. I like this level here at 1.28 as well. It just depends how far of a pullback we have, but I'm very bullish on both of them. So I'm just staying patient, waiting for the price to come to me and hopefully find some longs.
Miko, that's what I find so awesome and also very cool, just in general, is that a lot of times we do these streams together and you and I are finding similar setups. I mean, if we switch over to my screen for a second, pound and euro are straight up the two on the list, right? That's the two
hmm
of the currency pairs that, I mean, dollar Swiss bearish, but I don't love that one because the negative swap is awful on that. But,
hmm
and I know that doesn't sound like swap doesn't sound like it should play a big role, but when you do this stuff year in, year out, and swaps can seriously stack up and really run you a high cost. If I'm bullish on the dollar, I will generally avoid shorting dollar Swiss. It doesn't move a whole lot, and it also costs you a whole lot to hold short. So I'd prefer, if I'm going to get long pound US dollar, the interest rate differential between the two is pretty little. So your cost of holding, not so bad. Bullish overall reading. Got some retail contrarian signals, people getting really bearish on the pound dollar, trend to the upside, and economic data has been upbeat for the UK. I know we don't get too far into the fundamentals on this channel or on this segment of the show, but I can't help myself for just a second. We've got most of the pound impact factors here, like higher than expected inflation data, employment data that came in a little bit higher than expected. Most of our stuff here is favoring the pound. So that's why it's showing up also on the top setups. And that's why I think that on the technical side, it's also kind of producing this clean chart. I think we probably have the same general idea as if you get some kind of pullback. If you're really aggressive, maybe you're looking at this like 128.75 level, let's call it. I think I'd wait for a little bit more than that if I can get a pullback, but also like Euro. I mean, Euro coming into, we got the same zones drawn up, and I think that that's one of my favorite parts about this segment every week, Miko, is just hearing you and Marco's technical breakdown. I'm like, okay, so my technicals are lining up with theirs, and if I get a fundamental setup too, I'm liking the odds. So yeah, I think trying to be patient with it. It's been, for me, there's a lot of stuff that I want to trade. I have a directional bias, but I'm waiting for a lot of pullbacks. Is that you too right now?
Yeah, that was me for a good 3 months with the yen pairs.
Yeah.
I missed the first drop on the yen pairs, and then I've been waiting for them to pull back. Euro yen, I've been biding my time as well, and finally, it's given me a chance to pull back. And now I'm kind of doing the same thing with the USD pairs. Of course, a couple of weeks ago when we had that big drop with the USD with the dollar. So after we had that drop, I was kind of like, okay, big momentum. We cracked through a big level. Okay, that sets the tone for me in terms of my direction. And since those 3 candles have dropped, which was 5th of March, I've been waiting for a pullback. And of course, it's already the 20th of March. So it does take time if you're looking for that kind of swing bias. So yeah, now I'm just waiting for price to come towards me. And hopefully maybe next week, or if not, maybe the next week after that, the week after that, we might have some opportunities for the dollar.
Yeah. Yeah. And that's the thing about trading that, sometimes we have obviously like a membership on our side and you have your own members group and stuff. Sometimes people will like send in a message and be like, hey, why aren't you taking any trades? And they're genuinely, like, I put out a note this morning to our group here. Just show you my screen here. So I basically just said my watch list update, and where I'm looking at and what we can see here is that, sorry, let me just switch this. Basically a whole bunch of watch list stuff. Like I'm looking for euro dollar pullbacks, pound dollar pullbacks. I have a position in euro pound I'm looking to close out of. Swiss yen, I'm still just holding on the short side, just trailing stops on gold. And I'm looking for that S&P 500 breakout. I want to get your thoughts on that too with the indices. I also want to do metals. We got a lot to look at. Huge slide for S&P. The thing here for the bears, right? If the bears were going to take it, this was my thought this morning. I think that this would be the spot, right? If sellers on a price action basis were to start taking over this, it would be here or here. Do you generally agree with that? Or do you think that this is, what are your thoughts on the S&P?
Yeah, so I'm looking at another move down as well. I'm looking at around 5,800, which is this level here. So that's really one of my focuses. And the reason is because the 200 also lines up pretty well with it as well. But yeah, after that move we've had in the past few days, that has left behind a really solid support, which is now flipped as resistance. So if we can come into that, respect the 200 as well, I think that's a really strong confidence for the sellers. And from a technical point of view, I'll be looking at downside. And equally, if price was to really break above that with some momentum, that would be a bullish signal for me, because I'll be looking at this as potentially another one of these spikes, and that might cause price to rally back to the high there. So a strong break above that level would make me back away from that bearish bias. But for now, I like that level a lot.
Yeah, I opened up the stream today basically saying like where we are with the S&P 500 is a pretty critical decision point. You've got that level just below where your cursor is, that key support level, coming back into that. sellers are starting strong here, so we'll see. But if you do get the break of structure at 5,700 and maybe another follow through the 5,800 level, that's the way the indices are, right? They're very fickle with like the sell-offs. Like sell-offs. Now, what I say when I say that, what I mean is that we could see if the sellers do take it, it's like blink and you missed it. Like it does like this, right? Look how quick the sell-off is. So we could, and that is the challenge for being a bull on indices is like, if you're wrong about being bullish, you could very quickly reset down another, 5-7% on the index. So it's indices are tricky. They have their own set of challenges, just like everything else. What about metals, Miko? We had gold here. I've got a trade on this one. It's going pretty well. I've been trailing stops on it. Do you have any positions on gold or silver or thoughts on them?
I don't have any positions on gold and silver, but I am very interested in silver.
Mm-hmm.
It is looking very interesting, especially with the move to today to the downside. I'm looking around because this was the level I wasn't too sure about when we were last trading here, but since then prices cleared for it pretty well. So I'm expecting silver to push back to the highs at 34.8, 35. And of course, gold ripping to all-time highs as well. I do think silver might be lagging behind a little bit, so it might be looking to pick up the pace soon. But yeah, gold's looking exceptionally bullish. Really like the price action with that. Although might be due for a bit of a pullback, but still overall expecting more upside. It's likewise with silver. So if I can see a pullback into roughly this area, I'll hopefully find some entries to get long. And then my expectation is a push back to the high at 35, but I'll be seeing if I can probably hold it further than that if everything looks good. So yeah, gold and silver very bullish, but silver is kind of where my focus is at right now.
Fair enough. You see the better risk to reward in silver. I like it. Let's see, what else do we have? We've got to talk about Bitcoin here. This is Bitcoin bearish or if you had to give this a neutral, bullish, or bearish kind of outlook based on the technicals, what would you give it?
I would say bearish if I had to. Again, it depends on the horizon of what you're looking at. I would say for the next kind of week or two, I would say bearish. The breakout that range is kind of what signifies that for me. I am expecting a bit of a bounce soon, and I'm kind of looking at how price moves because with Bitcoin, I was looking back at the price action back here in 2021 when we had some sells. They were very, very aggressive. There was a lot of momentum. We didn't dilly-dally for too long, apart from this kind of range here. There was a really lot of selling pressure, especially over there as well. Whereas here, we did see a little bit of that, but it's a bit more corrective. So I do think with Bitcoin, as we approach the range here, there probably might be a nice reaction. I'm not too sure about all-time highs if we get back there straight away, but I do think there will be a nice buy. So until we get there, I'm pretty bearish on Bitcoin until about 72, 74K. And then perhaps we can judge price. If things look good, there could be a nice bounce for us to take, maybe back into 90K. But yeah, for now, I do think there's another drop to be had. I like the level here. If it was to revisit that, I think that would be a smart place to potentially short it again. And then, yeah, I'll see what we can do around 72, 74K.
I have another crazy chart to show you, or another symmetry line. You might already see where I'm going with this.
Yeah.
Yep, look at that. So the low of this range to the high of this range, I took the candle extremes. If we copy and paste this, look at this. So here's that measured move. That would put you an equal distant move if we made a range kind of down here.
Yeah.
I'd put you at around 68,000. And I've heard that number thrown around a lot, like down to, I mean, how much of a meme would it be if it turned around at 69,000, right? That's the perfect meme number. 69 rips higher. 69 to 420, that would be awesome.
That would be, I
that would
think
be,
that would, people would stop taking Bitcoin seriously at that point.
Yeah. I mean, at 420,000 per coin, I mean, my goodness, who knows? The future's unknown and crazy, but I just thought it was interesting. You've had that kind of range movement. And, this is the other thing about the craziness of it is like the highs were literally the inauguration day, right? So like the second Trump took office, right? This is just classic like market psychology is buy the rumor, sell the news, right?
Yeah.
That's exactly what happened with Bitcoin to the exact day. Like, it's crazy. But yeah, it's a crazy asset. But the thing that we've always said on this show about Bitcoin is that it is such a momentum heavy thing, and it goes both ways. When it's moving up, that momentum is like unstoppable. When it is moving down, you have to be really careful, because this thing could just, continue to melt very, very quickly. And then suddenly you're resetting back at, low 60s or high 60s very quickly. So just something to think about. This is a momentum vessel, I would say, most of the time. If you're on the right side of it, it's great. If you're on the wrong side, it's horrendous. So just got to be careful with that out here on that front. Let's see what else we have. So we talked yen pairs, we talked dollar. Is there anything else? Any other charts that stand out to you right now? Anything that you're watching close?
Well, I do have a position Aussie CHF, which I've been short for a while. I got short on this one.
Oh, nice.
In 12th of Feb, so it's been a while. I've already taken most of my profit at the low here. I didn't really want to hold on to the full swing I'm looking, because these are pretty much all-time lows for Aussie CHF. It's been a pretty nice downtrend for a while for this one. The negative swaps aren't great here for Aussie CHF, so I've taken most of my profit, but I'm holding a small position to see if we can get to the lows. I've been looking at a lot of the CHF pairs, because the way I kind of look at it is, you got the CHF pairs, you got the yen pairs, you got the USD pairs out the currencies, and of course you got the crosses between them. And I kind of focus a lot on CHF, yen, and USD, and then sometimes I look at the crosses like Euro Aussie, Pound Aussie. So I try and tick the boxes at the moment. Dollar CAD is what I'm looking at for USD. Euro Yen is what I'm looking for yen, and Aussie CHF what I'm looking for CHF. A lot of the crosses have been very bullish. I don't really have any opportunities with them until they retrace. Apart from that, I'm kind of just hoping silver can retrace and I can get some of the metals on the radar as well. So that's kind of really where my focus is. But apart from the other Forex markets, not really too interested. They've been pretty bullish, so I'm just waiting for pullbacks at the moment.
Love it. Yep. Busy week out there. Lots of volatility. So, Miko, I want to thank you for spending some time with me here today, flipping through so many charts. We did hit we hit a lot of different ones. So thank you for coming on, sharing your insights, your thoughts. For everybody who enjoyed that segment with Miko, do me a big favor. Go subscribe to his YouTube channel. We'll drop the link here in the chat to where you can go find him, follow along with his work. He's putting out free content and value to the community. And of course, we want to thank him and support him for coming on to our show here, adding some value to our analysis. So Miko, thank you very much for coming on, man.
Thank you. See you next time.
See you next time.
See ya.
All right, guys, we've got our next show starting here in just a bit. We've got, you guys know him, you love him. He's super popular on here. It's Forex James. He's coming on here to take a look at markets. I got to hop off. I'm going to run off and do a podcast session here in just a minute. Before I go, let me just remind you, we have got an upcoming giveaway announcement tomorrow for the EdgeFinder. We're giving away a free copy in our Telegram channel. And if you have not already joined, it is completely free to join. The Telegram channel will be linked in the chat here. So click this link, subscribe to the Telegram channel, and updates on the giveaway. All you have to do to join is just join the Telegram and look out for the info there. And then you can get access there. So we're giving one copy away for free. So here's the Telegram link. Click there, join, and then keep an eye out for EdgeFinder giveaways. And also, like I said earlier, you've got bonus content and clips in there. So definitely make sure you're subbed already to that. Okay, guys, we'll be right back just after this. Hello.
Attention, A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hey guys, how's everyone doing? Hope you're all well. Week is almost done. FOMC was pretty uneventful, really, to be honest. Nothing too interesting happened. Basically, same narrative. You could hear me with the video on. My bad. Must have been muted my mic too early. All good. Okay, sorry, I'm just catching up with the chat here. Mic's a bit loud. Okay, 1 second. Oh wait, hold on. There we go. That should be a little bit better. No, I was telling my girlfriend I was going on stream. Anyway, let's get started. I don't recall that bashy stop line. So dollar yen back to break even after being in some drawdown. Went from profit, drawdown, back to break even. So that's been a bit of a roller coaster. Pound Swiss is doing quite well. This is a very simple entry. Off the fib, we've got New Zealand US dollar doing very, very well. We've got the SP500 that's sort of just hovering around break even in some slight profit. I actually took the DAX this morning, again, off the fib. Very simple strategy that I trade over and over. Not doing too well at the moment, but that's fine. And we've got Euro dollar. This entry was pinpoint, actually. It was really, really strong. It wasn't my trade, to be 100% honest. It was the guy that runs this portfolio with me. But yeah, you got a really strong entry right at the highs. So that's really nice. It's paying some bills. Are you in DAX? Yes, I'm in DAX. Imagine I say something incriminating. Maybe I will one day. Maybe you'll get some dirt on me. But yeah, DAX, it's still fine. I'm still quite happy with the trade so far. Maybe just a little bit of an early entry or a little bit too aggressive, but same as always, oversold RSI, fib 50% pullback. Well, sorry, fib golden zone pullback lined up with previous structure slightly. It's not the strongest entry ever, but I was happy to take a go on this one, see how it turns out. Doing very well this month in terms of returns. We're up almost 6%. So I'm happy to have a little bit of a small go or a small jab on the DAX. Hey, James, would you mind looking back at pound Swiss? Yeah. We also had a really nice trade on pound New Zealand that I can show you in a second. I know we had the Bank of England hold rates this morning, but I'll be honest, I've got no idea what's going on there. I haven't looked into it, so I need to do that after the stream. It's on my to-do list. But it seems to have been quite positive for the pound, whatever did happen. Like I said, I know they held rates, but I don't know if there was any tone or anything behind it. We'll see. So yeah, this was the pound New Zealand trade. So I'm looking for another entry, possibly next week on another fib pullback. This was very simple. Relatively weak New Zealand dollar, sticky inflation in the UK. We came down to this 200 moving average, which lined up perfectly with our fib. If we draw that back here, you can see it came into this golden zone, oversold at RSI. Same strategy on repeat, play by play. So yeah, pretty nice trade there. I did cut profits a little bit early, but I'm fine doing that, to be honest. I take a look at the simple strategy. It's been working great with the fib. Shadow, that's great to hear. It is a very simple strategy. It's really hard to get wrong, to be honest, because you just need a fib, and that's pretty much it. Add some moving averages if you want them. Sean, AU, are you talking about Australian dollar? I assume that's not gold. Euro Swiss, okay. Yeah, I'll be honest. I think my bullish idea on Euro Swiss is out the window now, just because the euro pair seems to be pulling back. So the dollar's gained some strength today. So just natural liquidity flows. We're seeing inflow into the US dollar. It'll be interesting to see if we break out of this range. I think we will, but don't mark my words on that just yet. So as we see capital inflow or liquidity inflow into the dollar, we're seeing outflow of euro, outflow of Swiss, outflow of pound. The yen has also done very, very well. So we're seeing the yen follow this trend line almost perfectly. So we did see some downside on the yen, but my long thesis over the next, sort of year and a half is intact. The market's also reflecting that at the moment. My RSI strategy. Hans, if you want my strategy, you can go onto the Elite Traders website and fill in the email. You get it for free in your inbox instantly. But yeah, I'll cover it here simply. So essentially, we just wait for an oversold or overbought RSI, depending if you want to buy or sell. Length of 6, we've got an upper band of 80, lower band of 20. So if I'm looking to buy this market, I would buy it when the RSI is oversold, or I would sell it when it's overbought. But then I mix that with global macro. I'll mix it with trends using the fib. Using moving averages. I'll use the fib to gauge pullbacks. So it's not just an RSI. Obviously, it has components going with it. Can you go back to the DAX? Yeah. What do you want me to do on the DAX? I'm still pretty bullish on the DAX actually, but yeah, we'll see if this trade works out. It doesn't look very promising at the moment. That Nikkei trade you were talking about, James, shaping up. It is, absolutely. I'm a little bit annoyed I didn't take it, but at the time I didn't really see much to back it up. But in hindsight, yes, it's really nice. Again, the strategy works. We've got the fib, previous structure, RSIs have actually, sorry, not RSIs, the moving averages just crossed. RSI wasn't overbought really, but again, it's only a confluence. It's not a signal. But yeah, this would have been a great trade. Length of 6, 1 of 14. So I use 6 because it gives better indication of the market. So if we add another one, so if we go add the standard RSI of 14, let me just check. Is this 14? 70, 30, and 14. Yeah, so these are the default settings for the RSI. So you can see mine generally filters out a lot of noise. So you will only get the very extremes of the markets. And actually the 14 doesn't look too bad. But yeah, mine, I think, is just a little bit more accurate. But yeah, there's not a huge difference. But you can see like here, mine's got a slightly more overbought reading compared to the 14, slightly more oversold here. But yeah, again, it's not a huge difference. It's just my preference. I think it's a little bit more accurate in timing or gauging overbought, oversold situations. I actually owe that to, what's his name? Samuel Leach. I think that's his name. Yeah, Samuel Leach. He's quite a good trader. I was in his funding program for a while. You keep asking me to go into the DAX, but I don't know what you mean. I've already showed the DAX. I'm long. What more could I do? Yeah, there's not really anything too interesting with the DAX. The only thing I would say is the ECB being a little bit less restrictive is a bit of a damper. We've also got German fiscal stimulus, but that seems to be priced in now. So yeah, that's about it. I'm just following the trend really. Yes, I use a 200 moving average. EuroCAD. Asher, I've seen you put EuroCAD a few times. I'll have a look at that for you now. Yeah, the idea on EuroCAD, it hasn't really changed much. I would still like to go in for long positions. As I was saying, or as I've been saying, the Canadian economy is pretty weak, so I wouldn't really want to be going in for longs. They're still stuck in a trade war with the US. The euro, I would say, still has some positive factors to it, although they seem to be priced in. It seems like we're on a little bit of a pickup. The economy still isn't great, but I would say it's probably worth buying against the Canadian dollar. So if we can see a pullback, this would be a very simple break and retest and then continuation to the upside. But, we'll probably have to see this next week if we are going to see some pullback. If not, then my idea is out of the window. We just got euro yen. Euro yen shorts are what I would go for, to be honest. And here's another one. I gave this one to you as well, but yeah, I didn't take it. Unfortunately, it's been one of those times where I've had a really busy I've had a great month actually, but I didn't execute everything. If I did, I think I would probably be up a lot more than I am, but it is what it is. So euro yen, I still would go bearish. My long yen idea is still bullish. As I was saying, I think the euro had some positive news, but it seems to be priced in. The overall economy of Europe just isn't really attractive to me at the moment. So yeah, definitely still shorting it against stronger economies. Oh, sorry, more bullish ideas. Maybe not stronger economies, but euro yen short's fine. Hello, James. Any idea on why the market was heavily bearish today? I'm actually not sure. I did see, yeah, the S&P had a pretty large dump actually. Well, not a large dump, you know, a bit of a downside. But yeah, I'm not sure what caused it. I'll be honest. Really no idea. Just happened. UK 100. I like the level. Okay. Yeah, I'm not sure. So technically it looks okay. I would wait for a slightly deeper pullback, see if we can come down to either 200 moving average or the 50% fib level. That would be ideal for me to get in. But the only reason I would hold off is just because I'm not sure what was said in regarding the Bank of England, because I didn't check up on that, which is a bit slacking on my side, but I didn't. So it really depends on what was said. But I think long positions may be okay, but yeah, not something I'd be overly interested in right now. We actually haven't gone through gold yet. I know gold's on the EdgeFinder for a bullish reading at the moment. Yeah, so it's the only very bullish reading along with pound Australian. I mean, the trend is very, very strong as well. So I wouldn't look to short. I think the only opportunity is long. But you know, same as always, just wait for a pullback. Let's see. I think a 50% pullback here would actually be very, very good. So that would come into previous structure around here. It would also very likely allow the market to come into this 200 moving average. So it could maybe get some sort of intersect, maybe even oversold RSI as well. So I think this would be the only level I'd be looking to buy. I've got no interest other than that. Golden bond market interpretation of Powell's speech makes more sense as a stagflation possibility is going up now. Yeah, I know he said that he would expect, or he thinks I can't remember what it was actually. Hold on. I don't have my notes on me. I've completely forgotten what my point was there. I know he said he expects inflation to stay anchored. There was something else as well regarding the labor market. I'll be honest, it didn't sound overly optimistic. Why has the yen got some strength today? I would say natural market movements, just trend following, really. I wouldn't say there's necessarily a core fundamental reason for it. I think with the dollar picking up as well a little bit, we've seen a little bit of a repositioning in the markets. Godzilla on a rampage. Yeah, maybe. Pound card. We've already done Euro Swiss, so I'm not going to do that one again just yet. We might do it slightly later if we run out of things to talk about. Yeah, pound card. Same idea on the as the other ones. So the only way I would look to buy this is if we could get some sort of pullback. I would lean more towards going long or buying this market, but it's just too high at the moment. There's nothing for me to do here. So it's a case of just sit and wait. New Zealand yen down 1.6%. It is. Yeah, the yen's had a really nice run today. Pound Swiss. There you go. That's my pound Swiss position. So we will see how this one develops. I think it's still a good trade. The pound is displaying some resilience. Again, we did have the Bank of England rate decision today in the meeting, so I'll have to check on what was actually said there. But holding rates is great. So yeah, I've got no issue with this one. The Swiss is sideways moving. It's slightly down today. So yeah, I think it's fine. Dollar Swiss, dollar CAD. Okay. So dollar CAD, I think long positions are ideal, especially after the Fed speech yesterday. Again, they're not, it doesn't sound like they're in any rush to be cutting rates. So I'd be quite happy to buy on the next pullback. As I've already said, we've got relatively weak Canadian dollar or Canadian economy. Oil isn't doing very well, as you can see here on the H4. It's continuing to the downside. See, I think dollar CAD long is definitely the play to make, really, if you can get into some sort of position. Dollar Swiss, same sort of idea, really, but more of a short-term idea. So I wouldn't want to hold a long dollar Swiss trade, just really due to the trend. I wouldn't want to counter trade this. So I wouldn't want to go into a position here. So I wouldn't want to go short because the dollar is displaying strength, but I wouldn't want to go long because the market's in a downtrend. So yeah, I'm kind of stuck here. I would say US oil kind of leads. Yeah, I don't know. I don't really trade Brent. I don't really look at it, to be honest. I only ever focus on US oil. Can you please look at dollar yen? Yeah. So I'm in dollar yen, but it's not really doing anything. It's not in drawdown, which is nice. The trend remains to the downside, very clearly making lower highs, which is good. We're following 200 moving average very nicely. Still bullish on the yen. It's more a case now of what is the dollar going to do? Are we going to have a complete correction? Is this just a pullback? What is the situation here? I don't know. But long term, I would still happily continue going short. Seems like a strong swing point. Indeed. The yen run battered me today. Silver. Okay. Silver's back on the bullish list on the EdgeFinder here. So it's only got a score of 5. So it's just one above being neutral. But that's still a positive sign. So I was considering a long position on silver. I'm just a little bit hesitant because I'm a bit tilted today. So I don't really want to be taking trades. But technically, it looks completely fine. It's not. Is it fib level? Can't remember. Not quite. It's just missed this fib. But it is a very sort of classic break and retest that you can see. So we broke here. Now we're coming down to retest. So it's very likely we'll continue higher. But yeah, I'm just not in a position to take it just yet. If we can get a 4-hour bullish candle, then maybe I'll look to take it, but not being too aggressive today. I love dollar Swiss to downside on the monthly chart. Yeah, the monthly looks nice, actually. Nice rejection of this moving average. I suppose you've got two levels really of interest here, don't you? You've got the previous lows at 0.841, or you've got these lows all the way down here at 0.7. So you could maybe get a really nice swing trade if we can see the dollar continue its decline in value. Iced tea or coffee is neither. It's Coke with loads of ice cubes, so it's watered down a bit. Diet Coke, obviously. I think Diet Coke tastes so much nicer than full fat Coke or full sugar Coke. So that's my beverage of the day. It's quite warm in the UK today, so a nice icy Coke, refresh the brain cells. Looks like indices one more low break. Yeah, it's possible. I would like to not see that, but obviously possible. You've lost all respect. Fair enough, Shadow. Never had respect for you in the first place. It's a joke. I'm sorry. I didn't mean it. Long Coke? Maybe. I don't trade stocks. Actually not. No, I don't really look at the bond market that much. I will obviously pay attention to it, but it's not something I will rely on heavily for a trade idea, put it that way. Diet Coke might be worse for you. Oh, I've heard all that stuff. I don't care. I really don't care. I'm here to make money, have a good time, and that's it. Then I'm gone. British are not drinking tea. It's too hot for tea. Cold plain water is superior. You know what? It is. Yeah, it is. But a nice refreshing Coke definitely does the job. It's Nick's channel, not yours, James. We're super serious here. That is true, Sean. Maybe I should change my hat. I'll put a serious hat on. Health is wealth. Health is wealth, but to an extent, I'm not going to deprive myself of a Coke on a nice warm day just because it might kill me one day. It's like a cigar. You know, there's no point, in my view, there's no point having perfect health when you're 80 and you've had no fun in life. You've not enjoyed the food you want to enjoy. You've not had a nice cigar, or you've not done certain things because it might damage your health. What's the point? I'd rather die 10 years earlier and know that I enjoyed a steak, or I know I enjoyed a McDonald's when I was 20, or I enjoyed a Coke on stream. Who cares? I had a network issue. Did you manage to talk about Euro AUD? I don't remember, to be honest. I don't think we did. I would like to see more downside here, similar to the other Euro pairs. I think it's just a little bit overvalued. I think we've priced in pretty much all of the positive news for the Euro now. So if we could maybe see a rejection here at this fib level, I wouldn't mind maybe a short play. And this would purely be more of a pullback or a reversion trade, not an economics trade. Because I would, I think I would more prefer a long trade here based on economics. But, you know, if the market's overvalued and I see an opportunity to short, I might take it low risk. I look good for 80. Thank you. I appreciate that. Although my girlfriend's got me on a diet, so that might help. She got me eating grapefruits in the morning. I fucking hate grapefruits. Sorry, language. I don't like grapefruits. Taste awful. Steak is great. Steak is great. Eat some sauerkraut and you should be fine. Also, McDonald's doesn't taste as good as it used to 15 years ago. Yeah, McDonald's lost its spark. I'd much prefer KFC. A bit of fried chicken over some burger, some dry burger at that. I'd love AJ to have another leg down. I think it will. I think we're going to see likely a pullback, to be honest. I think we are a little bit extended now. We're a little bit oversold. So some sort of pullback before another leg down makes a lot of sense here. Maybe just 50% of the way, you know, standard 50% pullback. Look at that. I'm that good. The arrow is actually 50% pullback. Yeah, I would say that's a very possible play there. Heimer. I see we've got a League of Legends fan. Although it's a shame you play Heimerdinger. Buy gold. It's too high for me to buy right now. GJ Long, I would say probably not the best. Although we did have the rate decision. Again, I'd have to look at what was actually said. I think short term, maybe actually doesn't look bad technically for a long here. Yeah, it's rejecting this fib. We've got bullish moving averages, oversold RSI. Technically, I think this is actually quite a good trade. However, fundamentally, I don't really agree, but you could see some sort of short-term long play off that. Ball out. I think we're all looking for buys on gold. I think we're all just waiting for some pullback though, or me anyway. Nasdaq thoughts? Yeah, I'm still bullish. Let's just check what's been going on here. What are these guys doing? I know they bought the S&P. So they are primarily long. So you can see the long positioning is 57, slightly increased, but not by much. They reduced some shorts, reduced some longs, but nothing that interesting. But what I was saying on my stream this morning is what we're seeing in mainstream media is a huge focus really on stocks are down, recession is looming, it's all fear mongering. I don't see that. I don't see really much of a case at the moment anyway for a recession. And if that was the case, then why is smart money buying the dip on almost a 10% pullback, or give or take a 10% pullback, depending on what market you look at? So I would actually prefer to buy here. So buy the lows when everyone's fearful, and let it run, which actually is what I've done on the S&P. So this is a position we're in at the moment. I would maybe consider a short if we see more institutional positions get taken out, more long institutional positions getting taken out, more shorts put in, and if we reach some sort of pullback, then maybe yes, I'll flip short. But at the moment, I'm quite happy to stay on a bullish idea. Remember, just because we've had a sell-off, yes, it looks aggressive, but it's really not that bad. In a year's time, we won't even really remember this. Gold's going to hit 3,200, 3,500 by the end of the year. Yeah, definitely possible. Also, guys, I've just realized I've not shown you my account stats recently. So as you, or anyone that watches me often, will know that I had to shut down some of my accounts for CFD and spread betting because I'm moving to Asia, where obviously I can't spread bet because it's UK only, and in Indonesia I can't have CFDs. So the alternative was Darwin, which is what I'm running with a partner of mine. So this is the stats so far. We only opened it a few days ago, so you can see we're not even verified yet. We've still got 5 more days. So far, very good. The account's pretty much all green. We've peaked at a 4% drawdown. We've got 6% realized. 6% profit. And the MT5 currently has almost around 8% ish, 5% floating. So yeah, it's doing quite well so far. But yeah, we'll see how this one goes. Pinpoint entry on Eurodollar, by the way. Just want to show that off. So yeah, standard stuff. Why is GJ fundamentally bearish? So the reason I'm bearish on GJ, or all of the yen crosses really, and again, this is a long-term view. I'm not saying that it's going to go down today or it's going to happen next week. The thing is, the Bank of Japan is on a path to normalization. They've come out of negative interest rates. They sounded a little bit dovish actually in their rate decision they just had, but inflation is 4% in Japan, which is way above target. So I think they can hold rates, sure, but I think they're going to have to continue hiking at some point. And the Bank of Japan is notorious for being slow and secretive, whereas all of the other central banks are, yes, holding at the moment, but they're also still in more of a cutting cycle. So if you look at the Fed, yes, they're holding rates, but they're going to cut later in this year. Same thing with the Bank of England. They got sticky inflation, so they can't cut right now, but they are likely going to cut later this year. Swiss National Bank cutting possibly down to neutral rates. So yes, I think in the long term, the yen and the yield differentials are going to really benefit the yen, specifically with Swiss yen. I hope that answered your question. I don't know if that was clear. Oh, Philip, you're 80% in Thailand. Interesting. I'm moving to Thailand. So I'm moving to Indonesia for what? Well, I've got a rolling visa. So essentially it's a remote worker visa. So I can stay for a year, then I've got to renew it if I want to stay again. But I think Thailand is probably the move I'll make. So if you're out there, we could grab a drink. I see you're quite active in the community, which is nice. We could go and have a chat. Long euro dollar, risky. I think fundamentally, yeah, sounds good. However, technically, I think long euro dollar is going to be difficult. So we've got a huge amount of room here to see some sort of correction. It could come all the way back down to 1.042. I'm not saying that will happen. Again, this is all just possibilities. It could, in theory, continue moving up, could come down to this 200 moving average, could do a 50% retracement. Who knows? But I would still say there's some further downside to come. Again, I think a lot of the positives for the euro are, a lot of the positives for the euro are already priced in. We've got the dollar heading, it's still in consolidation, but it's heading back up. So if we can break out, we'll see a continued flow of liquidity out of the euro into the dollar, and we'll likely see a continued correction. So just be cautious. I'm not saying it's not going to happen. I'm not saying it can't just flip bullish, but caution is the way. Been there 15 years. How do you find it, Philip? Is it a nice place to be or a nice place to live? Because the thing is, I've never really traveled that much of Asia. Oh, sorry, I've not traveled that much of Asia. So I don't really know anything about Thailand or Indonesia, but I've been to South Korea. That's about it. But I love that side of the world, on the surface anyway, from what I do know. So I've just got to check something here. Okay. Yeah, no problem, Sassy. If he's been there 15, I'm sure it is James. What? That's true, actually. Yeah, I suppose he wouldn't have been there for that long if it's not a nice place. Lived in Thailand for a year. It's nice. Interesting. I've got no idea where exactly I'll be moving to. I'm at this point in my life, I'm very fluid. I'm very liquid in terms of assets. I'm just sort of going with the flow. So I'll be in Bali for a year. Then if I extend for another year, I might go to Jakarta. Then I might go to somewhere in Thailand. I might go to Malaysia. I really don't know. But actually, yeah, Jakarta is second option now. China food the best. You know what, Anton? I would say it's second. Korean is my number one. Korean fried chicken is on a different level. Korean noodles, cold noodles. Oh, amazing. Anyway, we need to probably get back onto the markets. I have a feeling we're going to get a message from Nick at some point. Can you actually talk about trading, please? This is the A1 trading show. Stay away from Pattaya. Okay. I've never heard of it, so I probably will stay away anyway. But DAX is pulling back, which is cool. Let's just have a quick look here. Yeah, nice. So we'll see if we can get something on the DAX just to close out the week with a little cherry on the top. Bernard, hello. Cold noodles. Yeah, cold noodles. I know it sounds gross. I know it sounds really weird, but trust me, amazing. It will change your life. You just don't know. You don't know the way. Anthex index, best 3 years in a row. I don't think I've ever looked at that, to be honest. Hey, Market Pulse knows it. Market Pulse knows the way. Oh, these positions are really nice. Actually, US dollar yen's not behaving very well, but I think I started today in a real mood. I was really unhappy today, but the market's a pain, so I'm quite happy actually today. Got some nice weather, Diet Coke, good little chat with you guys. We've got some sun. It's almost Friday. Yeah, Times are good. I'll whip up back and report back. Okay. Go and watch its Greece. Okay. Doesn't Greece have some serious economic problems? This stream can lift anyone's mood. Lee, I completely agree, actually. Sorry, battery died. It helps I speak and write Thai fairly good. Okay. Yeah, that's another thing. I'm really slow at learning, to be honest with you. I've been doing Spanish. I did Spanish for 6 years in high school because I went to a languages academy. I'll be honest, I can't really do anything in Spanish. I could order some food, but if they say anything back to me, I'm lost. I'll have to go back to English. Trust me, it's the asset. You know what, Jaime? I'm going to take that as financial advice. I might put a few racks on the line. And if it doesn't work, my lawyers will be in contact. Trust me. Worked in Thai. Okay, interesting. No, I'm unfortunately, still in the UK right now. My travels have had to be delayed. So my friend's getting married in July and I'm the best man. So I can't skip it. So I've got to stay. So the problem is, when I was talking to my accountant, and the thing is, if I could leave now in theory, but then the price for flying back, staying in the UK again, then flying back, and obviously I've still got the stag do, so also flying for that. I may as well just stay and get double taxed. It's going to be pretty irrelevant, really. So I may as well just stay and save myself some time. Can order 2 beers in Spanish. Don't need more than that. Fair enough, Ian. Pombo, sí, me comprende. Dax is on the move. Is Dax on the move? Are we getting rich today? Still at entry. Okay, hold on. Jaime, send me the ticker for the chart and I'll take a look. What's the outlook on gold? I think gold is going to continue higher, but I would say it's due a pullback. So the reason I'm saying that is because typically when we hit new all-time highs with gold, we consolidate for a little bit, we'll go back and forth, we'll keep testing, then we'll have some sort of profit taking. And that happens a lot when we create a new high. So if you go back and look for the past year, so since 2024, you'll see that same sort of action or the same behavior. That's not happened. 3,000 was a huge level. I mean, even me and Nick were talking about 3,000. I think the other guests as well were talking about 3,000 last year. So it's not something, it's not just always hit 3,000, who cares? It's a big milestone. We consolidated temporarily, but we've not had any downside from here, which I would have expected, and I do still expect it at some point. So I would suggest we're going to see something at some point, which I don't want to be caught in. So I'm just waiting. Do we get it? Great, I'll enter. If not, fine, I've missed out. Yeah, I don't know. I would love to do a really funny best man speech for it, but his and her family are all going to be there, and I think some of my family is going to be there as well. So I've got to keep it PG, which is actually going to be a little bit difficult because I've known the guy since I was like 13, so we've had some wild rides, and a lot of the stories we've got aren't PG friendly. Hold on, did you? Okay, so it's Anthex. Let's have a look. Oops. Okay, here we go. Let's look on the weekly. I've got to say, actually, that is quite impressive. Maybe you're right. It's 100% gain since 2021. Maybe this is the source. Maybe this guy knows something we don't. Say something JP would say. I would say this wedding is a concern. However, we will be keeping a close eye on it. However, it's data dependent. I don't think you'd be very appreciative of that. When you're at the bottom, there's only one way to go. Ian, that's everyone's last words when we're at the bottom. I'm sure the oil traders were saying that when oil went negative. They were at $20 a barrel. I can't go lower. At $5 a barrel, it can't go lower. At $0 a barrel, can't go lower. Goes negative. My ex-fiance's best lad is getting married next weekend. His GF kept asking me why he and his ex-fiance broke off their engagement. I know it's because the guy cheated. Should I tell her? Well, you've got two situations there. You can either tell her and be the bad guy or good guy, or you could just not tell her. And if she asks why, when she finds out, you say, well, I care about you too much. I couldn't tell you and watch your heart break. So either way, you're not going to be in a good position, to be honest, buddy. But I think the best way to go about life is just rip the Band-Aid off. Just do it. Always be honest is what my policy. Say it how it is. Anyway, that's my life advice for everyone before I leave. I've got about 15 minutes left, I think. I could say the marriage is transitory. Yeah, I could do. I'll just get that clip of the speech last night. Actually, that's that. Yeah, I don't know, my friend. Stay impartial. Just block both the numbers. Stay away. At this wedding, we'll closely monitor the situation. Yeah. All right, Godfrey wants US 100. Probably stay on chart-related stuff a little bit. Even though the wedding might be bullish, I'm not sure US 30 is. Yeah, it's the same as what I was saying on the NASDAQ and the S&P. I think we're still pretty much set for higher prices. It's just a case of monitoring it. Because, as I was saying earlier, there's a big fuss about recession and stock prices going down, the market's crashing, but smart money's still buying. I'm still buying, so, you know. But yeah, I'm really not concerned, to be honest. It's a healthy pullback in the grand scheme of things. So, yeah, buy away, in my view. Not financial advice, as always. Jaime, you're very passionate about Anthex. I like it. I like the passion. Pound Swiss testing highs again. Of course it's testing highs. I'm in it. I'm pushing price up. Market maker James. Let's see, what profits are we in here? Not much. So yeah, we got 1% if we get back to the highs. The fib extension would be, yeah, okay. We can let that run. Weekly pattern and Dow. Yeah, it looks, oops, that's not what I want. It does look good. It's very reacting quite bullish off the moving average, which is nice, which it historically does, or typically, I should say. Yeah, maybe this is the opportunity to buy the Dow low, but I'm not going to give you any input on that one. But yeah, just when I say no input, that's what I'm doing, but it could go wrong and we could see another 10% drop from here. So do as you please. Why copper went up a lot. We actually had a really nice trade on copper, which is funny because I never trade copper. Was it this one? Yeah, here. So we made about actually I think it was a bit more than that. It was around 2.5% here. So the reason China stimulus pushed the government hold on, sorry. China's stimulus push the government is ramping up infrastructure and EV investments, boosting copper demand. Supply constraints, disruptions, lower treatment charges, signal supply, tight supply. So I'm reading the notes from my other trader that sent the signal. I'm just trying to read it on the fly here. Green energy demand for copper is essential for keeping long-term fundamentals strong. Yeah, actually, it just seems pretty basic, to be honest with you. Essentially tied around China and their stimulus, by the sounds of it. But again, do your own research. I don't touch copper. But similar to gold and silver, I don't really see, from a technical standpoint, I don't see much reason to look to short. So to be honest, I think if you can see another pullback, longs are probably a good idea here. S&P is going to fall 10% more. Okay, Jaime, I'll take your word for it. All right, Sean, enjoy your meeting. I'll see you soon. Where would you put the fib on the current AUD JPY move? Just want to see if it's on the same page. So if I'm looking to go short, I would draw it from the high, which is the very peak. So I always draw it wick to wick. This is actually quite important. If you use a fib, well, trading is all about consistency. So the way you draw the fib is also quite important. So you can draw it from body. So, you could draw it higher. Some people do that. But if you're going to do that, make sure that's what you always do. So at least, you've got consistency in the way you're approaching it. But I always draw it from the wicks. So I would draw it like this. Then I'd draw the box, which has got quite nice structure in it here. So we've got, previous lows, previous highs, some more previous lows over here. 200 moving averages coming in. So if we could see the market pull back into this range, that would be perfect for me to go short. It's funny, I can't wrap my head around trading copper. I feel like the position would just rust and go to zero. Yeah, it's kind of the same, but I don't really know anything about copper. DAX is flying. If DAX isn't hit take profit yet, I'm going to be annoyed because you've got my hopes up now. Let's see. Oh, actually, that's better than what I was thinking it would be. So what's our P&L now? Coming up to 6%. Not bad. Ball out. That's the same way I view it as well. The wick is still a price movement. That's why I always draw the wick as. Yeah, that's a good point. Is fib really useful? Is human nature mathematical? Yes and no. Well, yeah and no, because the way you should view indicators and technical analysis in general is everything is a herd mentality. Everything is based on who's looking at the same thing. And this is why I say that simple strategies are always, most of the time, specifically for retail traders, are going to be the best way to go. Because if you're using something that's no one trades, no one cares about, that's super complex or super weird, no one else is looking at the same thing. Whereas if you just draw a line on the weekly time frame and it lines up with previous highs, very likely there's going to be other people looking at that same level, other people buying and selling from that same level, likely selling if it's bearish economics or bullish, whatever. The fib is the same. It's like a self-fulfilling prophecy. When you draw it, there'll be likely other people looking at the same thing. So there you go. Hopefully that answers your question. News? Is there news? Hold on, let me check. What do we have? It's just existing home sales. Got a Trump speech, actually. Didn't know this was coming. Trump speech in about half an hour. So I'll be paying attention to that. Get ready for some more fun and games in the market. Fib is nothing special. Once you get the concept, you don't have to draw it. Yeah, ball out. That's exactly it. It's just a 50% retracement. It is very, very simple. Sashi, you're more than welcome. Sweet. Okay. Yeah, I'm not seeing really much of anything actually at the moment. Tesla's interesting. I mean, I think we've spoken about Tesla on every stream I've done this week, so I'm not going to go into it, but I'm just watching to see what happens. If we can reject this 200 weekly moving average again, maybe I'd take a small position, just see how it goes. Fibs are useful. Yeah, I do like the fib. I think it's probably my favorite tool. NASDAQ. I didn't forget NASDAQ, Godfrey. I read your comment and then went to the NASDAQ. Feel free to rewind. I always find it hard to see where to make my entry, either the 0.5 or the 618. Well, Shadow, that's why it's the zone. So you wouldn't just do one or the other. So for example, you could in theory just set a limit order. So buy limit, sell limit at 50% as stop loss above the 61.8. But the way I use it, is there a good example? I think this was a fib pullback here. Yeah, it was. Okay. So the way I would execute using a fib is very easy. So obviously we draw the fib, then we just wait and see, okay, price is coming to the fib. Does it line up with anything else? Well, we had an oversold RSI. We've got the moving average. Price respected the moving average. Very simply, we had a bullish candle here, a bearish candle that couldn't break below. It didn't really do anything. Then followed by another bullish candle. Shows some slowdown in the market, lack of momentum. Again, we've still got the moving average in the RSI. We're inside the fib zone. I'm buying that. And if I'm stopped out, fine. You know, it's a losing trade. Max, no problem. I literally trade a trend or SNR break, fib golden zone, engulfing candle, inline macros. Matt, I think we've got pretty much the same strategy. Actually, sounds like mine. Euro pound cover was perfect. Yeah, I'm a little bit sad I wasn't in Euro pound. I've been in and out of it a few times over the past 1 to 2 weeks, but I didn't really get much. I'm sure Nick's very happy now, though. I think he said that you could get out break even around this price. Can you cover Bitcoin? I can have a look at the price action for you, but I've got no idea about cryptos and things. Short term on the H4, it looks very bearish. I mean, we're very clearly heading to the downside. We've got bearish moving averages. RSI just came out of oversold. The weekly looks bullish, however. A really nice pin bar rejection off this. We've also got previous structure almost lines up. It doesn't really, actually. So I would say if we can get this weekly candle to close bullish, engulf the previous pin bar candle, I think that would be quite nice. The weekly, the weekly RSI is low. It's not quite oversold, but there you go. So to answer your question, I have no idea. I think if you use the weekly, then yes, look for long positions. Then you could translate that into the H4 and look for an entry. Or you could go for short-term trading, maybe on the H4, look for shorts, but yeah, I'm not involved in that market. I don't use the MACD. I just use the RSI. Yeah, ball out. I'm kind of the same. I don't like it. I've got a very small holding on Bitcoin on a ledger, but it's a negligible amount. It's really not much. I don't trade it actively either. Look at GJ. Okay. Yeah, the thing is with GJ, I think short term we could potentially have some more upside. Long term, though, I would still prefer to go in for shorts. So I've got no interest. However, this is quite attractive, again, just from a technical standpoint. I do quite like this. We've rejected the fib. We've got bullish moving averages, RSI oversold, previous structure, very simple. So this H4 candle could close, engulfing the previous bearish candle. I think the technical setup is quite good for a long position. What's the price on gold? Gold is at 3,033. Yeah, I really would just say it's a case of waiting. I just can't see any entry on gold right now, especially for a swing trade or an intraday position at least. GJ, EJ, okay. Same thing here, actually. Yeah, bullish moving averages, oversold RSI. Wouldn't be a surprise to me now if we do see some upside on these yen pairs, but again, long-term bearish, so I don't really mind too much if we do have some short-term upside. Please look at Doge. I'm sorry, I draw the line at Doge. I'm not going to sit here and analyze meme coins. It's nothing personal. German 40. Yeah, it's pretty flat at the moment, actually. I'm long off this fib, but it's not really doing anything, to be quite honest. I think we are... I would say it's possible to have more upside. Obviously, otherwise I wouldn't take it. But yeah, more downside is also possible. So in this case, I'm sort of just going for a bit of a coin flip trade just to see if we do get some reaction here. Correct this bearish candle. I'm just going for a correction trade for a 1 to 1.5. New Zealand US dollar long. I'm short actually here. I wouldn't look to go long just yet. I mean, actually, I think technically you could. Let's see. You know what? Yeah, this one actually lines up as well quite nice. We've got 200 moving average, oversold RSI, bullish moving averages. So yeah, I think again technically it looks fine, but I'm just not really sure. I think the dollar might be having a bit of a day here where it's quite crucial. If we can break above this range and stay above, then I think we're in for a bit of a correction here on the dollar. If not, then yes, likely a long position is the play. Chris coming soon. Yes, Chris will be on in a couple of minutes. Don't worry, Bashi. I'll be off your screen shortly. Opinion on NAS H1. Yeah, I quite like a bullish idea here. If we could see these moving averages cross, that would signal the trend changing. So yeah, I think there's possibility, but for a short-term trade right now, I think you would have to put stop loss there, entry here, which I'll be honest, I'm not really a fan of. Just because the market's consolidating, it's very likely you could just get whipsawed out of all this. So yeah, just be cautious. But I would say upside, generally speaking. What do you think about the S&P? Same thing. So I'm long on the S&P. It's just a case really of letting it run. So I've said it a few times on the stream, so I won't say it too much again, but I think there's a lot of fear being pumped out to the masses at the moment. I think smart money is the one that's capitalizing on that. So if you look at the COT report, they've bought the S&P. Again, the drop's been very healthy. It's not been a crash, really. I mean, I wouldn't call it that. It's been a give or take a 10% correction, which is very, very normal. Okay. Maxi, hello. I don't know if I saw you earlier or not. Yeah, that's about it. Oh, dollar sec. So I was discussing dollar sec at the start of this week. It was one that was on my watch list as a bit of a hedge against the dollar. Oh, sorry, a bit of a hedge with the dollar. I guess I was going against the dollar at the time. And so far, it's looking good. It's a very bread and butter setup, really. This is the weekly time frame. Bear in mind, just range since 2022. It's just sideways. It's a very ping pong market. The moving average is still bullish. RSI on the weekly is oversold, so I do actually really like this, but I'm just not sure I want to hold on to the dollar for that long. So I might take it next week and just see how it goes. But yeah, not my ideal trade just yet anyway. Bashi's thirsty. Yeah, I know. UJ coming into a buy zone. I don't know. I would actually say the opposite, to be honest. This might be, and this is obviously me with a short bias because I would like to see this market continue down. I would still look to go short. I mean, it's currently testing the moving averages. The RSI is almost overbought, coming into the fib almost if we come slightly higher. But again, that's me being a little bit biased to go short. James, did you go out with a cigar yesterday? I didn't, unfortunately. No, I got a little bit busy. So I just had to watch it at the desk. You gotta send J Pal an invoice for the hour. Okay. So, guys, I've just got the message that Chris is here to take over the show. So, I appreciate you all being here as always. You've been very nice to talk to. Have a great day. I'm not sure if I'm on tomorrow, but if I'm not, have a great weekend. If I am, I'll see you tomorrow. Guys, see you very, very soon. Don't get margin called. Have a good one.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everyone, what's happening? How we're doing? Happy Thursday. Happy post-Fed day. Markets up a little bit. We had a gap lower down to about 560, 261 on the SPY. It's climbed back up to fill the gap. We're just shy of yesterday's highs. I'm looking at taking possibly a little butterfly spread into tomorrow's expiration, see if we get up into 573. It's a little bit wide, but hopefully something I can catch. If I don't think this necessarily lasts all day tomorrow. I'm honestly contemplating changing this expiration down to the 20th, which is today. And we're kind of outside of the expected move if we get there. But let me see what this looks like If I go to 573, either 2 or 3 wide. So it cost me 30 cents to do that today. If I go 3 wide, it's going to cost me 60 cents. That's just outside the expected move. Son of a biscuit. I mean, that would be a pretty good run to the upside. We go 562 to 572 or 573. It's a pretty good directional move. Let me see if by tomorrow we get there. So 573. I was just looking at this trade with one of my other services, and I don't mind the setup. So I can do a 2 wide for 23 cents. I go 3 wide for 48 cents. This does capture some of that move tomorrow in case we don't fully get there today. But question is can I turn this into profit by today? We're going to find out. But we've already exceeded the expected move on the day for SPX. Market makers were looking today about a $44 move, and it's already been decreasing a little bit. I've got a sell side at 57.10 and a sell all the way down here at 55.85, which is mostly in profit right now. So I'm just going to hang out a little bit longer and see how the day plays out. A couple things on the technical side. Let's go to the 15-minute time frame. So I'm just curious on how this little high to low plays out. We have to get through. This is, I believe, this week expiration for tomorrow's a triple witching. So you have volatility expirations, you have index expirations, stock expirations, all on Friday. Next week, you go in towards the end of the final Friday expiration of the month, which is the 28th, and then you end the quarter on the 31st, which is Monday. And then you have April, April 2nd, is a big tariff looming talk, whatever. So I just wonder if this market coming into tariff talk in April is going to be sitting pretty much right in the middle of this decline. So if you can see my fibs on here, from this high to this low, if we're going to end up pulling back right around this 50% zone before we go into the next round of tariff conversations or headlines or whatever you want to call it. So on a positive note right now, the Fed did start pushing some price back to the right side of the trend line. Okay, we had our little rally from Thursday, Friday that pushed up here. Okay, Monday we started out with a high. We gapped lower Tuesday, put in a bit of a floor around that 560 level, 5600 level. And with the Fed yesterday kind of inching up the highs, you can look at the futures market today. It's also been, a little bouncy. We've gone kind of all over the place. So, I mean, on the right-hand side of the trend line, which is what I'm really looking for, you go back to where this move started, connect these highs, you have resistance here that's been broken. So is it possible that the bulls, after testing the trend line, now breaking the trend line, are they able to get into some open space? If the bulls get into open space and break these highs, that's fine by me. So I'm going to take a trade here. I don't love this trade, but if we get there today, it pays out pretty nicely. So if I go March 21st and buy Butterfly, it's probably easier. Butterfly is going to be tough to trade if I pin. Cost me $1 if we get to 573 today. Okay. Can we get there? I think we can. Come on. If I buy this and it turns red, I'm going to be pissed. So I'm thinking of buying this 572 or 573 call, and I'm looking to see if price will get up to my 573 strike. This has been growing since yesterday. This was around 1,100 to 1,200 net, and now it's at 1,800. So flows are certainly coming in to try to get price to push up to that level. Expiration is tomorrow. If we try to make a high on the week, we can certainly get there. So let me see. I'm going to toss a 572, 573 call. And can we get there by tomorrow? If we get there by today, it'd be even better. I'm going to wait. I don't know. I'm going to wait. Otherwise, I'm getting excited. I'm tossing things at highs for the morning, spending $250 that might be difficult. If we pull back, that 250 all of a sudden becomes $2, and I'll just be sitting on a very quick, sensitive loss. So I'm going to hold off right now. But overall, seeing some P&L in the day, year to date's looking a little bit better. So I'll just hang in there, try to be patient. I mean, we've had 0 pullbacks today outside of a pause, and that was at 10:10 a.m. So we've already gone past the expected move on the day. If we just settle in a little bit, then I can hopefully turn a nice little profit on my SPX trade. Which I mean, it's not that far off though. But 57.10 is my SPX trade, so I got to see how the day unfolds. But I'm not upset by watching this market go higher. So going back to this chart here, I've called the symmetry level, meaning this low, high, higher, low, higher, high. That is right around 57.95. Go back to this previous low. That's right around 57, right around 57.95 or 57.80. Looking at these fibs, the 50% pullback zones around 58.20, 58.25. So I think that the market somewhere in here is, as we come into the end of the quarter and into April, this is where the bulls and bears are going to fight. I think the bulls can, try to maintain, but if we have heavy amounts of volume that come back in and defend this level, the bears can certainly claw right back and take this thing back down to the lows. So this is kind of what we talked about the last week or so. If we have a risk on move, I think I'd be pleasantly surprised to see the market go higher, and I would be fully expecting the market to come back and retest the lows. Okay. All right. So we'll see how the day unfolds. But on the right-hand side of this little trend line and a correction, not a bad thing. News-wise, things are pretty light today. I saw that President Trump is on the calendar here for 10:40 a.m. But from the looks of it, it sounds like either a recorded session or something very scripted, but it's a digital asset summit in New York via satellite. So it could just be a canned speech. We'll see if there's any headlines that stoke anything. If Bitcoin makes a run, okay, maybe. So let's just go top down and see what we have today. So we're up around 0.5% on the SPX, 0.47 on the SPY. Equal weight's up a little bit. NASDAQ up 0.62, Q's up 0.60, Dow's up 0.4. Again, all the charts look pretty similar. We had a big slide, so I just took a fib from high to low. I'm looking at this like 38. I mean, the nice thing from today is if we're getting above this 200 moving average, okay, or we can even change this. If I add in let me add a simple moving average. So I'll go simple moving average. Okay, and it gives me a bunch of them. So let me just go into the settings here. All I really care about is I'll change SMA1 to a 200, and then I'll get rid of the other ones. So SMA1 is all I really care about. There. Okay, so let me make that a little bit larger just so you can see what I'm talking about. There. How does this not extend further right? Interesting. So it just ends. Make it the same color, I guess. There. Okay. There we go. Now we got it. So now we're caught up to current price. So a couple of things. One is we're sitting around the 200 moving average right now on the exponential. So this is the exponential moving average in red, and we're sitting right at it. So a close above and a close above this 30% retracement level, to me, is an encouraging sign that we come back up into the 38, possibly the 50% retracement. So I think two key levels to be watching. I know this is like getting into the granular details here, but right at this EMA and right at this SMA, this would be where I'd say resistance could certainly lurk. Okay. So if we can get above this 200 EMA and we get above this 30% zone, the 382 is sitting right there with the simple moving average just slightly higher. That data point is around 573 to 574. See what I'm saying? Like we have a break of the moving averages. And so if price comes back up to test the moving averages, whether it's this one or this one, and then show a sign of rejection, that wouldn't be a huge surprise. That is the big obstacle right now for the bulls, is to get back above these moving averages, because for all these years, right, for all these years, we've seen this 200 moving average act as a really dynamic support level. When it's in a bull market, it is way out of the way. When it's in a bear market, it is resistance. So our 2022, we were above it and then got back below it, like it stayed in a downtrend. You can see its resistance there, became support over here, became support over here. It's been a while since we hit it, which is why we weren't surprised that we ended up going bearish and finding that corrective zone. But this is a tricky spot, because if we're through it, we could pull back and just, sniff it out again, find that structure, and I could see the bears flushing down again. Some content I soaked up yesterday, some pretty smart investors that I follow talking about a potential bullish rally in a bearish market. So that's certainly flipped the landscape from, cautiously bullish and cautiously optimistic into now a bull rally in a bear market. Now, whether that is true or not, I mean, one thing that can happen that not a lot of people talk about is the market can just go sideways, right? I mean, this market may not go to highs or lows. I still think that this level, I mean, I'm reading more that like, oh, the Fed put and the Trump put is way lower than current prices, and maybe it is. One thing I want to look at, and let me see if I can go. I got a screenshot up from yesterday. So, what's that trade? Oh yeah. Let's see here. I want to go S&P 12-month EPS. S&P 12-month EPS. See if that pops up on a Y chart. Hopefully I don't have to. So 75. That's not what I want. So what I'm looking at is the earnings revisions that have been happening are the reason that we're kind of seeing the markets fall. So earnings revisions, if they are going, like earnings are forecasted up, but the actual S&P is up here. So having this market drop and come back into line with the forward price earnings is making sense. Like that's when you say, hey, the market's overvalued. It was, and this reality check is typically what happens. Despite all the noise of tariffs, despite all the noise with Trump and co and the Fed and the uncertainty, the reality is this market operates typically in an environment of earnings, right? Earnings are solid, earnings are consistent, earnings are growing, earnings are trending. Well, then the market should stay right around the real value of earnings. But if this earnings starts to dip lower, that's where there could be some more catch up to go to the downside. So just something to be aware of. All right, let's continue to go top down. Let me catch some comments here. Let's go to the Dow. Same thing, high to low, pulling back around that 38% zone. So 38%, 50% zone. We'll see what happens. This could be a broadening pattern on the Dow. I actually have some long positions. It's not really a broadening pattern. I guess it's a channel because we did not make a higher high there. But watching closely. But if we go, high, low, lower high, lower low, like that's a pretty scary spot to be for the Dow. If we break below, again, April lows, August lows, we break below this area, the concern is that this becomes a very real scare. That would be my next major level support. If we don't hold in this level around April lows or August lows, then we're talking this 5-period yearly moving average, which is way down here. So I just want to be aware that this market might be able to drop 19%. I want to be aware that the S&P and the NASDAQ could drop 20+%. So if we're talking like nasty legs lower, this market can slip from a 10% correction into a legitimate like 20% scare. Whether that scare is sustainable, whether it's a scare is a bear market, whether that scare is going to be a full-on recession, we haven't really felt the pain of a full everything is down, everything is bad recession, right? I mean, that was 2008. Everything was down. 2022, like stocks were down, but we had certain sectors that were resilient. And so I'm wondering if that's how this year possibly plays out, as we have kind of a rolling recession where certain things hang in there, more defensive plays, more dividend plays, more low beta plays, but we start to see just more pain on the growth and momentum side. Russell can't really catch a break. There's really strong structure in here. This previous resistance level. I do have some income plays. I think I took profit on this one for IWM, this 190 put. Let me double check that here. So 190 on IWM. Yep. So I've got a May expiration right now. Son of a biscuit. That thing keeps growing. Are we getting there today? I don't know. I just keep looking at my other chart. Like, I think we might just get to this 573 handle. Anyway, out to May of 190 on the Russell. JD, I rolled this one. This is now out to May for another credit. It's fine. And then naked puts are fine. Okay, let me see if I have any expirations on the Russell here. So if I go IWM, April, May for everything, that's not a big deal. I do have some expirations I need to take a look at. So I've got SPX on a trade today. Let me check and see. I think I've got a daily profit play looking pretty good. So this one is showing profit. This one is showing profit. Choices. I've been in the trade for about 17 days. That's just around the halfway point. If we can hang in there for the week and weekend, this trade and this trade are looking pretty good. This one's already up $40, $50. This one's positive as well. I might just take the small winner. So I got into this one for $5 credit. Let me see if I can close this one out. So $65 here. It's not a huge profit. 65 out of 500. So that's a 13% take profit on that one. Let me see if I can close this one out. So if I close this for like 435 or less, trading at 445. All right. I'll let that one go a little bit longer. Okay, what are those 0 DTs I have today? All right, so SPX, Tesla, we're at 236 and change. I may be taking an assignment on Tesla. It's a 111 trade with an assignment price of 255. If I get assigned, which I will if it's below 255, which is probably the case for tomorrow, I will have some shares of Tesla. This is going to be this is going to be a pretty classic lesson in options where I'm willing to take the assignment on the underlying and then I use options to lower my cost basis. I'm going to own Tesla around 247. I'm going to sell premium to lower my cost basis, hopefully by another $10 or more. If it gets called away, I'm looking to turn it into an income trade, not necessarily a long-term hold, because I have other income trades. So I'm just going to use the capital, try to get it called away. I'm debating on whether I just sell a covered call and lower the cost basis, or I put in a collar trade and have downside protection in case we're going to flush lower again. So the way this would work would be, here's an example on the account. It would be, I sold some premium on Tesla there for, this one is actually just a wide credit spread. So this one is a wide bull put spread. So this one is 6 wide. I collected $5.40. That's an income trade. But the trade that I'm looking at for this week is right here. So the trade is for $2.17. If price is below 255, I'm going to take the assignment. So the way this trade works is I have a $5 profit trap, 255 assignment, and I collected $2.17. So I did that. So 255 minus 5 minus 2.17 there. So 247.83 is my break even. If I get the assignment going into next week, and it's very likely that I do, then I'm looking out for maybe a week. I'm not trying to mess around here. I'm going out maybe a week or so selling. An at the money would be around $10 to $11. I can repair the trade pretty quickly, or I can sell a break even or better and still get probably $4, $5, $6 on the trade. So go from a 247 break even to about a 240 break even. And if price gets back above it, it's income. If price gets, if price goes lower, that's why I'm debating whether or not I put on a collar trade, which would be I sell a covered call and I buy a put. And if price goes down, at least I have some protection. But to do a collar trade, I'm going to go out a little bit farther as opposed to just a covered call. I try to sell some premium, week to week. Okay. All right. So that could be happening here, over the weekend. Let's go VIX. VIX continues to drop and sell off, which is encouraging for the near-term correction. This 4 to 14-day average is now, I think, 7 or 8 candles in. So 1, 2, 3, 4, 5, 6, 7, 8 candles, I believe. 1, 2, 3, 4, 5, 6, 7. So 8 candles in. Okay. So if we're going to continue to push a little bit lower in volatility, that's a good thing. Settle back in, where? Do we settle back into like 17, 16, 15? I'm fine with that. If the market recovers, we could be anticipating maybe some higher volatility in the coming weeks. VIX 1 day. This is a pretty nice sign to be down on the VIX 1 day, showing that we're getting some bullish direction here. Okay, I hate to take this trade, but I think I got to take a stab at it. So March 21st. Are we getting to the 572? Gosh, it's so tempting. All I'm debating is if I just buy a call, that 250 is now trading for 290. 240, so it's up, 30, 40 cents right now. But I'm chasing, man. I'm not going to take the trade. I'll just complain about it later. SPXY. The trade I looked at last week in SPXY, when we were sitting at like a 28, 29 VIX, I was looking at selling some premium in SPXY. The only reason I didn't is because even on my margin accounts, it wasn't treated any better with margin at all. It was treated like a pure cash account. And so I didn't want to see any type of volatility event that maybe spikes this thing down. The premium's not all that great. So anyway, it is responding nicely. The VIX is dropping and the SVIX or SPXY is going up, which is what I was looking for. So it's up a few bucks. I was considering is just selling some puts on it. Dollar index, dollar's actually up. We did see a Swiss National Bank cut last night. Let's go currency strength. So we have Aussie New Zealand weaker. We've got JPY and dollar stronger. We've got some volatility today. Big move in the Aussie New Zealand. Are we getting a dip in China today? I'm just curious where that's coming from. But this is going along with what we talked about in the currency market with the dollar index. Is you have these 3 very aggressive candles, and I saw this as an inefficiency. So if you're near term long the dollar, and I mean like very near term, like you're getting the trade to cooperate. Now coming back into this candle area, I would say if the dollar comes back into this area here, then it looks like a good opportunity to look for a confirmation to then start to sell. So you take this down to a smaller time frame, which I'm going to go ahead and hide that 200 moving average. Simple. There's my 200 EMA. Now go down to a smaller time frame. Okay, we are now back above the 200 moving average on the 1 hour chart. So if we're going, back here, this is the inefficiency candle on the daily. So if we go up through that and start to then roll over, I look for a sell trade, stop above, either stop just above this U-turn or even a stop above the trend line, and then see if we can make some fresh lows on the dollar. Okay. Oil is hanging in off those lows still. A lot of chop. I actually did want to look at a trade today on oil. I mean, I can price it out. I don't know what the risk scenario is going to be, but I'm going to price this one out. So I'm going to go /CL for oil futures. And how far out? So I can go out to 27 days or 56 days. Well, that's a big difference. Let's find out. So if I do a 111, so if I buy, let's say, a 65 by 64, then how much lower can I go? I'm gonna have to go way lower. Let's see. 61 by 60. I mean, that's a profit trap of 430 bucks. This one I could live with. So a 61 by 60, 50. And then I could do like a 55 by 51. Nope. 6 cents credit. Let's see if I can go a little bit lower. So I make $100 also with a profit trap. Well outside the expected move. That'd be a 7 delta. There's a 96% chance of profit in this one on May 15th. Risk is $4,000. It's about a 2% risk. Buying power is not too bad, only taking up $922 in the futures market. If we saw a push lower in oil, I mean, right now CL's trading around 60, 67.89. We'd have to see a pretty aggressive slide. We'd have to see oil down, 11.5%. That's certainly noteworthy. And then my 55 would be the strike. That's at least worth $100. I don't love it. Not a terrible trade. Certainly not a lot of buying power, but I don't know. I mean, seasonality wise, oil should be bullish. If we go back to like May's and June's, usually oil. I mean, if there's demand for it, we're going to see some resiliency. So I don't know. I just don't love it. I think it's a good trade. $55 is probably hard to get to, but if we do break that floor, I mean, all this consolidation could be a breakout. So this is my concern on oil, is that we have all this support and these lower highs. But if this thing breaks out, this thing goes, down pretty aggressively. And I don't want to be stuck here saying like, oh yeah, it's a good trade. And then the volatility picks up because we've had super tight trading ranges on oil. So I'm just going to stay out of it for now. Gold, 30.39. This is a high from yesterday. I still think gold is overextended in the near term. I'm not saying I want to short gold. I'm just saying I want to see a pause or a pullback. I want to find some dynamic support in here. We have stretched away over 15% from the 200 moving average, which is pretty high. You go back to any time in history, you don't see a lot of those moves that's that high of a percentage. I think the most I've seen is about 18 to 20%. So we could still have a little bit of a drift, but I drew this fib out yesterday. I thought this was interesting. If you go from this breakout point in 2018, take a swing from low to high, okay, and that projects up to a finished 618 extension up here, and then you have another fib from this low to this high. Well, we had a very shallow pullback, and we're running up towards the 1.8 and a 1.27 extension. A lot of times with a shallow pullback, we don't see the prices continue to go much higher. So I could see from this low to this high with a shallow pullback, this market runs up to a 1.8, 1.27 extension and then pulls back into the same high again. So possibly a pullback into like 2,800 before we continue to go much higher. I mean, if it just continues to drift, I mean, so be it. It's freaking gold. What are you going to do? But from a technical standpoint, it's a little overextended. Based on this fib sequence, I think we have a pullback coming. We got lots of dynamic support that would be, excellent to see a bounce. So I'm still kind of waiting. I'm just kind of patiently waiting to add to my gold exposure. Silver, on the other hand, Kind of same thing, like we're making slightly higher highs. We're not at new highs on silver. We haven't made all-time highs on silver, but I'm still encouraged that we're still going to go higher towards like $35, $36. If we stay in a bit of a channel play, then there's room into the 40s. What I'm really excited about is if we get above this $36 handle, that this is open space for silver to really start to launch and maybe get into the mid to high 40s. That's ultimately my profit target. So all the positions I do have on silver, I'm looking for my SI futures position. That's looking good for profit. Let me go back to symbol here. So SI futures up about $1,000, and my SLV positions. I've got some other exposure. I've got PHYS for physical gold and silver. That's up around 28.50. I have SLV, which is up around 18 grand. So I'm still running with a pretty decent size position in silver. My gold position is up around 15.4. So I mean, gold and silver for me are still a really healthy part of my portfolio this year, and I think there's more upside in both. I'm just looking to hang in there. So that's gold and silver. Bitcoin 86 and change, looking a little bit better. IBIT trading at 48. I might also take an assignment this week on IBIT. I don't think it's this week. Maybe it is. Let me double check here. IBIT. So I have some shares. Let me check. So these are May, April, May, I know I have a March expiration in here somewhere. It might be on some of the new client accounts that I pulled in this year. April, May, April. This one has April, May. Here we go. Cash secured puts. So this account is from a $534 position. It's actually showing profit, and all these could potentially be assigned. I'm not going to keep the shares. I'm just going to take the profit. So 534 credit is now trading for about $4 and what, 40 cents. I'm going to just take the profit here and not take the assignment, and I'll keep this ratio spread out to April. So the nice thing is staggering in my puts like this, the 51.50, 49.48, net credit is 534, and I'm trading for about $90 profit. If I don't do anything, I would actually take the assignment on the 51 and the 50. Have to tie up some capital there. I'm not going to do it on this account. Cash to me and buying power means a lot. So I'm going to go ahead and take this profit here, close out all 4 positions, and avoid the assignment. So 446, let's go 440, I'll go 450. Come on, dude. 460. Okay, just close out all 4 of those puts for $80, which is fine. And just grabbed a bunch more profit. Or I mean, not profit, but grabbed a bunch more buying power, which to me is most important. Most important is that buying power. So that helps me avoid the assignment, keep the cash at the ready. And I just added in another, I don't know, maybe 10 grand, because that would have been up to 400 shares with this week's expiration. I wouldn't have taken the assignment under the 48 put, but I would have been assigned 51, 50, and 49. That's 300 shares. So 300 shares at an average price of around $50. Oops. Well, yeah. So $50 times 300, it'd be 15 grand in buying power. So it's a margin account, so probably about $7,500. But still, I want the buying power, and I want the buying power because I might be taking assignment next week on Tesla. Okay. Anything else on IBIT here? Same thing. This one is 1, 2, 3, 4. Let me group these together for puts. And still up some profit. I'm going to take the profit. 1, 2, 3, 4. Pulled in 536. See if I can close this out for hopefully 450 or less. 452 is the ask price. I mean, come on, guys. There we go. 452 got filled on that debit. Okay, so that was a 536. Close it out for 452. 5.36 minus 4.52. That was 83 cents profit that I just kept, and also avoiding the buying power reduction. I still have a ratio spread out to April, which I'm fine hanging on to that one. This one here, just to put out to April. And then this one, April and May. So I'm good with that. I still have a collar on the own positions of IBIT, but okay, that's good. Freeing up some more capital, some more cash. Now I'm sitting around still about 1/3 of my account is in cash, which is good. Okay, that's Bitcoin. MicroStrategy up to 306. Showing some resiliency. I'm not going to complain if Bitcoin is going to rally a little bit and MicroStrategy is going to follow along with it. Anything greater than 310, I get it called away. My break even's 263. That's not a bad win. I've got 1,500 shares of MicroStrategy. That would not be a bad win at all. It's going to be probably over 10K, I think. So if I go 310 minus 263.72, get it called away for 1,500 shares. Oh, good math on that, huh? 310 minus 263.72 times 1,500 shares. So, shnikes. That seems like a lot of capital. That can't be right. Oh, never mind. I don't have 1,500 shares. That's a crap ton of shares. I have 500 shares. Sorry. So 46.28. There. It's still 23 grand. That's a good chunk of profit on MicroStrategy for a trade that I bought at 346, lowered the cost base to 263. It obviously needs to hang in there and show some resiliency, but if it does, that's a good thing. And making a little 20 grand income trade certainly doesn't hurt. All right, let's see what happens. Any comments from Trump today? Anything happening on financial juice? Let's see. Trump issues bombshell demand for Fed. I don't even know what that means. Does anybody know what that means? Bombshell demand? Is it clickbait? Should I even click on this? Look at this garbage. Stocks plunge before the open. I mean, markets are freaking up today. Ignore the news, everybody. Ignore the news. Copper up to some fresh highs. Any pullback on copper, I'm happy to consider some more positions. We are coming up. This is the one thing I want to note on copper. This is an all-time high. So is rip roaring as copper seems to be, it has never been higher. I don't think. If it has been higher, it is way, way, way back in the day, but it hasn't. Look at this. Previous all-time highs back in 2011, and then we poked during 2024, and we fell hard. But man, I mean, again, it's a pretty nice channel. I think that if we can clear these highs, then copper does have room to run. This is why I also think the whole idea of a recession and global economy crash, not even close. They call it Dr. Copper for a reason. They say it has this self-proclaimed economics degree, but copper's been ripping. So it doesn't mean I want to buy at the highs, because I certainly don't, but it means that this trade is going to expire for full profit, that April expiration. I doubt we're coming all the way back to 4.20. I wouldn't mind seeing a dip or a pullback in any capacity. So if we pull back to this level, I look for a chance to buy more. Or at least establish some type of option position for an income trade. So if I do an income trade here, we get a pullback, income trade here, get a pullback, income trade here. I can just kind of follow this thing up for income trades rather than just going long the futures contract. There's obviously a lot more money made in the futures contract, but there's also a lot more risk. Okay, Japanese yen still hanging out. Nikkei. Interesting. I talked about this yesterday. The Nikkei versus FXY. This is the Japanese yen, but the Nikkei versus EWJ is actually up to some highs. DXJ up to some highs. I don't know. I don't know how this is performing better outside of it gets rid of like the bottom 20% of the Nikkei. So that's a good thing in my opinion. You're kind of taking a higher cut of the stocks. DAX, little chop suey up here. I still like DAX to dips. Pullbacks and dips. Dynamic support looks pretty good. FEZ, I just sold some premium. That's my way of having some exposure on the DAX. FTSE, still pretty choppy, but pretty well supported overall. Argentina, I'd love to see a pullback towards this 200 moving average. And we'll see if we get it. Otherwise, I'm not going to chase this thing. China still makes fresh highs, pulling back a little bit today. Brazil looking pretty good. My EWZ ILF trades looking pretty good. I added some exposure this week. Mags at 47. Probably a reason that we're getting a big lift today is having Mags up. And let's take a look at the heat map really quickly. So Meta is, son of a biscuit. Did Meta gap today? I looked at that yesterday, right before my fudge muffin. Well, that didn't take long. Shoot. I was looking at a bull call spread yesterday on Meta. Damn, that was fast. So it was just because we came back to the 200 moving average. I was curious if that market bounced, and sure enough. But I did get the trading yesterday before the close. But man, that was it's fine. I missed the trade. It's no big deal. Part of me hopes there's a little bit of a flush lower. So this high, this low, if we pull back again, maybe having one more correction on Meta. We haven't had really a meaningful correction since literally the bottom of 2022. So having this thing go from this low to this high, if we go 236 and we pull back a little bit deeper, this is where I'm more interested in Meta. I might have to wait for that trade, but whatever. I didn't get the chance to buy it. I was looking at a bull call spread of like the 580 to 585, and it's already up $20. So it's all good. I'll see what happens up in this like midsection. Microsoft catching some bid. Got some income trades on Microsoft. This one is profit. This one is profit. And I have this one out to April that needs to stay above 370, which I think should be fairly safe right now. 370 is pretty decent. Is it in profit right now? It's probably a little bit too much time, but let's find out. Yeah, it's only up $20, and it's a $2.30 credit. I'm going to try to collect as much of that as I can. If this $2.30 is trading for 180, 190, $2 net profit, I'll look to take some profit, but I'm going to have to wait a little bit longer. I do want to see what happened on PDD. I put in a trade this week. We're at 128, and I want to see if we're above. Interesting. So earnings came out this morning. We're kind of right in the middle. I've got this expiration out to next week. So can we get to 130? My break even on this trade is around 137.50. So 137.50 is my break even, and 114.50 is my break even. Okay, so let's see if we end up tagging one of these highs or lows this week or next. If we get up into this area, that's a break even trade or better. So anything greater than 137.50, I'm going to set a chart alarm here. And this one at 114.50. Okay, Netflix 958. This is another one. So I have a couple of trades. This one's going to expire for full profit tomorrow. And then I have a broke wing butterfly up here for credit of around $1. So I'm looking to see if price will just hang out here. Price can go back down to the 200 moving average, which is what I think it's going to do. I just don't know timing wise, like, do we have Netflix go all the way back to the highs again before it comes back down? Or is this a spot to say, you've got a flush, you got a little structure in here, market pulls right back to it, finds resistance, and then sells back off. So this actually, let me see if I can line this trade up. I might take a bear call spread on Netflix if it's good asymmetry. So if I were to buy, maybe a pre-earnings. So I don't really want to get into the way of earnings because we got earnings on the 17th. But that's the expiration, son of a biscuit. That's a tough one. Is it after bell? It's after bell. So is my expiration. So anyway, let me see here. If I went to the downside, if I buy a 960 put and sell, cost me 260 to make 240, cost me 492 to make 508. That's not a bad trade as far as like one-to-one risk. All I need to see is price going lower. If price goes lower, that pays pretty well. It would be out a little bit farther. It's not out a ton of time, but it's out about 22 days. If price goes down, this should be showing some profit. I mean, this 490 debit would be trading for, maybe $6. It's a max credit of 10, so it could be trading for, $6, $7, $8. But I definitely want to be out of that trade before earnings. I'm just thinking technically, if we have I don't know, this level to me seems like resistance. We still haven't hit the bar count. And maybe this is one of those stocks where it just has an excessively long bar count. Like Meta was one of the longest bar counts that I'd seen in the markets, and we're sitting around 354 bars on Netflix. Meta was like in the 500s. So Meta was not a surprise that we came back to the 200 moving average, because this thing was way the heck back here. It took 530 bars. So maybe this is a bit early, although this does look like a head and shoulders to me. But one thing that happens in the stock market is you get a lot of fake head and shoulders. So we'd have to have, I'd say, the broader market and the mags, and not that Netflix is in the mags, but it's a big one. It's a FANG, right? This level, I think, could offer some resistance. I think the moving average still gets hit. So one way I can look at it is either I take the trade as I just looked at for about a $480 risk to make $500 in profit, or if it goes up a little bit higher, I look at the same thing and just kind of say I think it's going to be resistance. I could be wrong on both of the trades, but the reason I would consider looking for a short trade is because of that 200 moving average. When we sold off, heavy here, put in some income trades. When we sold off heavy here, put in some income trades, and just sticking with it for right now. All right, NVIDIA, 119. I don't have a ton going on with NVIDIA outside of some collar trades and ratio spreads, and I sold a bunch of premium. So those are the shares that I own out to May. Put. Lots of puts that I sold on NVIDIA, all the way down to $70 to $75. I think that the expected move is way overstated versus the actual move when it comes to an Ivy rank that was up into the 50s or 60s with that big sell-off we saw, to now the Ivy rank at 22. Anything can happen, but just based on the options market, this is a pretty good amount of premium. So if I don't have any assignment here, that's $3.45 plus $2.53 plus $1.32 plus $1.41. So I could make $871 on NVIDIA without a single assignment. So here's hoping. Okay. Still a tough road ahead. I mean, we're on the right-hand side of the trend line. We're back to the 200 moving average. I think an important level on NVIDIA, just like the S&P and the NASDAQ, is getting back above this 200 moving average. For some reason, this little developer conference that happened didn't get the market too excited about NVIDIA. We're sitting on the backside of the trend line. This August low could be in play. This April low could be in play. These, to me, are like fair market value levels. If you take a look at NVIDIA from a fundamental screener, let's see here, nothing. Bike ramp, huh? All right. Anyway, I just saw the headline with Trump. I was trying to see what that was. It's slippery news on those little thumbnails. All right, let's go to NVIDIA. Okay, insider selling. So it's trading just below estimated fair value, which is why I think this current kind of 110, 115 area could be pretty firm. Still trading high for price to earnings, but it's NVIDIA. I mean, the compression we've seen on NVIDIA from that 153 down to 100, I mean, that brought the price of earnings down quite a bit. This is, I think this shows some resiliency here to show that it's still trading under fair value, which is why I think if I'm selling puts at 75 and 70, that those are just going to be good income trades. Compared to some, I mean, the fact that Broadcom is 88.4, Advanced Micro Devices, AMD is 104. I mean, that's crazy. On a price to earnings and even a PEG ratio, NVIDIA is actually looking pretty good compared to its peers. ARM Holdings at 154 times earnings. That's way out there. Qualcomm, that's a little bit different. 16.7. That looks like a pretty good value. So anyway, it's going to be a battle royale, but I think this fair market value between like this 105 to 115 zone, we might just see it chop around in here until Mags gets a little bit of a lift off. Okay, what else? Tesla 235. We'll talk more about this. If I take on the assignment this weekend, I will walk through it. This is the potential trade. I'll just add to this text box, and I'll just track my break even. I'm looking to repair the stock pretty quickly on this first chunk. I've got some income trades out here. Tesla from a fair market value, I think there is still room for Tesla to slide. So we're chill trading super high. I mean, this was like 130, 140 price to earnings. Now it's 106. But finding fair value in the next maybe 20 bucks. We could overshoot it, right? We could break the 200 mark. We could have that be like the big dip. That could be the capitulation. You could see, dark pools kind of loading up on Tesla for sub 200. So I'm looking at kind of hanging there. I know it's going to take some capital, but own some shares. I think this is why the protective collar might be helpful, where I can buy a put, sell a call, and have prices covered on both sides. So if it gets called away, fine. If it also goes lower, I can ride the long put down and lower my cost basis. So that may not be a bad trade in case we have another flush. So I look at, technically on Tesla, this low. I mean, this has already had a incredible downside. If we can stay here for a bit of nothing, that would be kind of good. But if we have another flush down, I think that like capitulation, if it holds, I think that'd be kind of the reversal pattern look. Is we get into like the 180s, 170s, and then we see a reversal pattern, and this gets a lot more exciting for maybe the second half of the year. Maybe. Time will tell. Berkshire Hathaway up to some fresh highs. Kind of nice to see a stock doing that, even though it is Warren Buffett, and he's sitting on 20% of Berkshire Hathaway's in cash right now. But I've got a full profit on this one coming into. I'm not going to do anything. Netflix is full profit. Berkshire Hathaway's full profit. I'm not going to short this. I'd still be looking for dips. However, I say that, and bar count wise, we have a respectable bar count, 348 bars, and percentage away. I mean, I wouldn't be terribly surprised. That's 16.45%. I'm not ready to short Berkshire Hathaway yet, but it might be coming. It might be coming. Even if I do like some type of fancy call condor trade where I basically I buy a call and I sell a call and I sell a call and I buy a call, and it creates this little profit rep window, I might look to do that. But is Berkshire Hathaway going to be this crazy safety net because they're sitting in so much cash that they look more attractive? I mean, the market on the S&P sold off 10% to find the 200 moving average, and Berkshire did nothing. That's a great point, Sarah. Yep. I mean, it's sad to say that, but yeah. I mean, he is 94 years old. So I do think that, if and when, I mean, 94 years old, I think is on borrowed time, you could say. But, he has proven that eating See's candy and drinking Coke all day somehow makes you live longer. So I'm surprised that's not every Coca-Cola commercial for the last 2 decades is just showing a picture of Warren Buffett because he's proven that it works. I'm just kidding. Anyway, yeah, I would be not surprised to see there's a change into the guard at some point, and that probably does do some, even though it maybe fundamentally does zero damage to the actual company philosophy. But I think on the optics of that happening, sure, that's going to be a big change. Gap up on TLT, but fading. Let me take a look at the 10-year yield. Going lower, that's encouraging. Once again, I don't mind seeing that. Obviously, I'd like to see it go to fresh lows around 4.1 or lower. The 10 and the 2. So this is the 10-year 2-year, still inverted. The 10 and 3 still disinverted. So this was a disinversion to reinversion. Mortgage rates. We're going to see if this prints a slightly lower bump in the next maybe 2 to 4 weeks. Futures market junk has come back. This is good for credit spreads, showing that there's still plenty of liquidity in the market. LQD also coming back. Jobless claims. Here is your unemployment rate. When the heck did this happen? Is that right? I thought we were like a 4.1. There's core PCE at 2.6. Core PCE should be coming out next Friday as well. So we get through this Friday. Any major news tomorrow? Retail sales for the CAD go into next week. I think PCE is on Friday next week. Nope. GDP, unemployment claims, PMI numbers for the Eurozone, PMI numbers for the for Monday for the US. We get. I thought there's. Do we not have a freaking core PCE? Am I missing something? Nothing tomorrow. Okay. I guess we don't have a core PCE for the US. Is it the first week of April? Huh. All right. I guess we don't have core PCE on March like I thought. We have non-farm on the 4th. Tariff talk on it's not going to be officially in the news, but I believe it's April 2nd. We've got the big Q1 expiration on Monday, the 31st. So times are getting more interesting. Let's check China really quickly before we go. Am I still long? No, I got out of that trade. I closed it out this last week. I was in, I issued that. It was in Pulver Alerts. I updated it. I was taking a small loss here for about 30 pips and then up in profit here, up in profit here. Net result was around 200 and I think 90 pips net. So I lost 30 pips on this trade, and then the other ones added up total to 290. So I'm already out of that trade. CAD, Swiss, yen. Let's check the Swiss pairs really quickly since we did cut rates on the Swiss. So today, the 20th, they did cut another 25 basis points. Did that affect currency strength? Swiss is euro, and the euro is just below the baseline level. Let's go to charts here. Aussie Swiss. Yikes. So I'm leveled into Aussie Swiss. I'm in Aussie Swiss here. So sitting on a small drawdown with, and again, this is all intentional. I'm adding in levels, so I'm either getting buy limits getting filled or buy stops getting filled. I'm just going to be patient. CAD Swiss looking a little bit better. Same thing, leveling in, adding some buy limits, adding some buy stops. Euro Swiss got filled on another pullback trade, got some buy stops above. If we pull back deeper, I will add some more. If we have another pullback trade into this level, I'll probably add another chunk, and then I have another one pending down here as well. So buy limits below, buy stops above. Profit target is up higher. Euro pound, I'm out of this trade. Had a couple of winners here. Robot pretty much does most of the heavy lifting for me, but when we were here, I bought it going to the 200 moving average, bought it again, went to the 200 moving average. That's worked out pretty well just on those discretionary trades. This is probably still that type of look. You know, if this ends up breaking out and doing something fantastic, it's, you know, going to be the most boring trend you've ever seen because it moves about 20, 30 pips a day. So if you want to trade like super tight range bound currencies, euro pound tends to be the trick. Obviously that was disrupted in 2016 with Brexit, but other than that, this thing is pretty easy to trade. Yen crosses, you know, love them or hate them. I tend to hate them. New Zealand pair. So Euro New Zealand, Euro CAD, Euro Aussie. That, you know, ridiculous run we saw was not a surprise to see a short-term top. Euro CAD, same thing, short-term top. I think a lot of this move gets faded. So when you go from a low to high, you know, we've already pulled back probably 236. If you're going 382 or 50, see if this finds some equilibrium. This could also be a nice rotation into commodities. But again, it's tricky. You got to go to the smaller time frame, find that confirmation, and then you've got just a swing to trade back to. I would already be looking at being break even or better. If I was shorting on a smaller time frame and get some precision on like a 15 or 30 minute chart, if you're in and you're break even or better, and this is going lower, you're just hoping this thing goes and trails. So I'm not in these trades, but just saying, like, I wasn't surprised after watching a 1,000 pip rip that these are starting to fade. So Euro Aussie, Euro CAD, Euro New Zealand's, I mean, they look pretty similar, right? Pound Aussie. I mean, okay, Pound Aussie faded and right back up. Pound CAD, little choppy. Pound New Zealand, same thing. Like the Aussie New Zealand getting hit hard today. We'll see. I'm not in this pairs for a reason. Like that was a weird run that we saw for that like 6, 7, 8 days in a row. I mean, each one of those pairs were up like nearly 1,000 pips. All right, what else? Dollar crosses. I mean, DXY in the short term may be pulling back. I'm still long New Zealand CAD, still long New Zealand Swiss. Yen pairs, who cares? New Zealand dollar, I closed out of that trade. Dollar CAD, still waiting. Dollar Swiss, if we get pullbacks, great. Otherwise, I'm not trading it. I want to see pullbacks into this same area. So 86, 85, 84, I'll look to dollar cost average in. If the dollar ends up breaking above these highs, I think there's room to get up into this pocket. So we could make a run into like 96, 97, possibly even up to parity on the dollar Swiss. This one, I mean, now at a 0.25 Swiss and a 4.25, I mean, that's a pretty good yield to have in the currency market. I know the Fed's going to cut, but they're going to be sitting around 3.75% with a Swiss that's at 0.25. You still get a 3.5% swap on holding dollar Swiss long. I mean, it's not risk free. But if you get some price appreciation in the pips, as well as a 3.5% kicker in the Forex market, that's pretty good. Okay, dollar yen, maybe it's a topping pattern. We have this swing, we have this setup. I'm hearing some more rumblings of possibly a Japanese yen deleveraging. Maybe, if we're going to go another leg lower, then sure, this yen pair, this dollar yen could be a good barometer for if we have a topping pattern. Look for a swing above. I still do not like this trade. I would rather trade Japanese yen futures. I'd rather be long the Nikkei, and I'd rather be long FXY for shares. I don't like the negative swap the last couple of years because I can trade things that are offering positive swap. I try to stick with that. Yen pairs are just super slippery, and brokers charge what seems to be an arm and a leg, even though it's just negative swap. I just hate it. And I say that because I've watched years where it's like, I think it's a good trade and I'm holding on to it. Like, I'm comfortable holding on a trade for months at a time. And when I do that and it's just paper cut, financing fees, double, triple rollover costs, it adds up and it just drives me nuts. So that's part of the reason I'm really unattracted to the yen pairs right now. So trading them elsewhere, like in futures or in the actual ETFs that are trading alongside the yen, way more fair. You basically just pay the commission on the trade like a futures commission, and I can hold it as long as I need to for an options trade. FXY, just buy shares, it's free. So if I'm right on direction and the Japanese yen gets stronger, I can benefit from that without paying, negative swap. So, all right. The rest of these are all non-US. I did end up adding some exposure to SCHY, which is a Euro and Asia. It's an ex-US Schwab dividend ETF. So it has about a 4% dividend. I think there's decent appreciation of China. Eurozone continue to do pretty well. Coming back to these recent highs back in 2021 up to maybe 27, I think there's room for this thing possibly to run up into the 30s. So if I bought it around 25, does it get into $30+? That would be a 17, 18% rip. I'd be pretty happy with that. For an index or an ETF, I'd be pretty happy with that. So just some exposure. And then between SCHY, ILF and EWZ and some of the Japanese yen, I mean, that's kind of my non-US play. Obviously, I've got some exposure in China. Still have some Alibaba, still have some Baidu, still have some JD.com. And I mean, I've got some of the non-US stuff covered. And then a lot of other trades. So, all right, everybody, I'll let you go for today. Happy Thursday. We'll back and do it again tomorrow. So take care. All right, thanks, everybody. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.